case you missed it on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Equity futures on the S&P 500 fading just a touch. We're just about unchanged. Bond yields are lower. We're down by 2 basis points. The 10-year 423.22. Under surveillance this morning, markets anticipating Trump 2.0.
We had the best economy in history. We're going to make it much better than even that. We're going to bring all these companies that left us because of stupid politicians on our side. They allowed it to happen. They're all coming back, either that or they're going to have to pay tariffs like they never had to even think about before. I will cut your energy prices in half within 12 months. And to bring back millions of jobs, we will give our companies the lowest taxes, the lowest energy costs, the lowest regulatory burdens, and free access to the best and biggest market on the planet.
So here's the latest this morning. The former president proposing a number of economic initiatives under the new American industrialism plan, including a 20% tariff on all imports, 60% duty on Chinese goods, and a tax on U.S. companies that send jobs overseas. The former deputy assistant for the president for international economics, Cleet Williams, joins us now. Cleet, welcome to the program, sir. I want to start with process and priorities, and I want to lean on your experience in Trump 1.0. You got on board just as they were kicking off the trade war. Can you walk us through how they'll be thinking about where the emphasis will be on which side of the policy agenda if they get another shot at this?
Sure. Well, obviously, as you're hearing from the remarks from President Trump, trade is going to be a day one top-tier priority, and I expect that he'll get into it pretty quickly. Now, I think from a process standpoint, it's important for folks to realize there's a couple things he can do almost immediately, very quickly, and then there's some other policies that he's probably going to want to talk with the team a bit, as well as consult with other policymakers like Congress in Washington. And so on that first list, the things that I think he can come out of the gates very quickly on is China. And we already have an existing mechanism under Section 301 where we've got hundreds of billions of tariffs in place on China. And he can move those up, down, and around in order to try to force China to comply with the Phase 1 deal or to address unfair trade practices. So that can happen quickly. I think on digital services taxes, the U.S. started investigations into 10 different countries. You know, France is probably the most prominent, a country who has been unilaterally taxing U.S. Digital companies. And there was an existing mechanism on that that he could turn on probably pretty quickly, maybe within 60 days, and start tariffing their products if they don't comply. I think some of the things that we're going to have a little bit of a longer time frame, a little bit of a longer fuse, are these across-the-board measures. is the president works with his team and figures out exactly how he wants to implement that. I think he's going to take a very serious look at it, and the process will start very soon, but that implementation may take a little while as they figure out the finer points.
Howard Lutnick was on recently, and he said tariffs would raise $500 billion. He's leading up the Trump transition team. Where does he get that $500 billion from?
Yeah, I don't know exactly where that figure is, but if you look at the China tariffs that we've already had in place, they've already collected hundreds of billions of dollars, and if you put that over the 10-year horizon, which is what everyone's talking about in order to pay for the tax cuts, you could get a figure close to that. And one of the things I'm hearing from friends in Congress is that they are taking very seriously this idea from President Trump about using some of the tariff revenue to help pay for the extension of those tax cuts. And so I really do think you could see those two things coming together next year.
But how much are the tariffs going to cost the United States if it's a tit-for-tat scenario like we had in the prior administration, Trump 1.0, and there was billions of dollars given to farmers because China was no longer accepting their goods?
So look, I think you need to look at these tariffs as part of the holistic economic policy, right? I mean, tariffs are one part of the equation that's going to fit together with tax cuts, with deregulation, with efforts to lower energy. So I think it's dangerous to just say in isolation, this is the impact of a single tariff on the U.S. economy. It's part of a much bigger picture. Now, in terms of your question about retaliation and how all that's going to work, I think it's really going to depend on how other countries respond. And ultimately, the U.S. is going to make the case to other countries that, look, your measures, by and large, your tariff rates, by and large, they're higher than ours. You are doing a lot of things to keep out U.S. products from your markets. You know, the president likes to focus on the EU, and the reality is we have a massive trade deficit with the EU on agricultural products because they don't buy our beef, they don't buy our pork, they don't buy our chicken. And they give lots of excuses for why that's the case. But the question is going to be when President Trump says, okay, if you've got barriers on our products, we're going to put barriers on your products. The question is, how do they respond? And I don't think we can sit here and predict that today, but those are the kinds of questions he's going to try to force.
But Clete, you don't honestly think there's not going to be retaliation? I mean, we already saw retaliation the first time.
I do expect that countries will respond. But ultimately, what I would say to them in return is, look, you know, we have an average tariff rate of 3%. If you go to Europe, it's about 5%. If you go to China, it's higher than that. If you go to India, it's 18%. And so I think the appropriate response to the United States is to say, hey, we're gonna meet you, and we're gonna both try to have equivalent and fair trade measures. And that's what the president's gonna try to achieve.
Clete, just quickly here, there's a belief in a lot of business executive areas where they believe that this president, that former President Donald Trump, will respond if the stock market sells off in response to one of his proposals. That if he does propose really big tariffs and the S&P tanks, he'll say, just kidding, I'm going to pull that back. Is that true?
Well, I don't know about the just kidding part, but as I mentioned before, I think you really need to look at these things holistically and think about how they fit together. And when you've got all these other things going on taxes and regulation, I mean, that's going to be part of the equation. And on the trade front, I don't want to put this in terms of sort of what the market does on one day or another, but the objective here is obviously to try to promote more manufacturing in the United States, to try to get fairer terms of trade abroad. And I think if the president can successfully execute on that, I mean, that's going to be good for the market. That's going to be good for our economy. If there's less barriers to our exports, there's less Chinese subsidies distorting our markets. So again, I can't say on a day-to-day basis how the market will fluctuate, but there is a longer-term strategy here that needs to be looked at holistically.
Many a thesis has been written about the regulatory hurdle in Europe around food and whether that's stealth protectionism or not. We can have that argument and debate another time. Clete Williams of Aiken. Clete knows that. It's good to see you, sir. Thank you. Big takeaway there. Trump 1.0, taxes first, trade later. This time, you could see both at the same time. And as you know Washington, D.C. better than most, that's going to be very complex and quite hard.
It is. And tariffs, he can do unilaterally day one. Taxes is going to be a negotiation in Congress. And we need to know the composition of Congress, whether or not we could see how much taxes they can cut.
And potentially a very long negotiation. In the third hour of Bloomberg Surveillance, Emily Rowland of John Hancock, Anurag Rana of Bloomberg Intelligence, Claudia Saab of New Century Advisors, and Michael Kushmer of Morgan Stanley from New York City. This is Bloomberg.
What what legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to...
If you go back to PCs, now I know a lot of people have, especially if you're using the Linux analogy, people don't necessarily consider Windows to be maximally open, but compared to the Apple approach of kind of coupling your operating system with the device, the Windows approach was a more open ecosystem, and it won. And part of my hope for the next generation of platforms, which includes both AI and the work that we're doing in augmented and virtual reality, is to, Meta wants to be on the side of building the open ecosystems. And it's not just that we want to build something that's an alternative to the closed ecosystem. I want to restore the industry to the state where the open ecosystem is actually the one that is leading. So I think it's possible. I think we'll, I think we're making good steps on that in both AI and AR and VR. But that's something that I just personally and philosophically care about, given the kind of limits on creativity that I've felt have sort of been applied to our industry by the closed model of mobile development over the last 10, 15 years.
I want to go deeper on that point that you just mentioned of restoring the industry to the state where the open ecosystem is the one that's leading. And so obviously right now we have Llama 3.145B just came out. It's competitive and it even beats some of the best closed models across key benchmarks, which is insane in its own right. But in your letter, you also mentioned that Llama 4 is expected to become the most advanced model in the industry. Are there any specific things about Llama 4 that you're really excited about?
Oh man, I mean, it's we're just doing 3.1 for Llama now. I think it might be a little early to talk about Llama 4, but we've got the compute cluster set up. We've got a bunch of the data set up. We kind of have a sense of what the architecture is going to be, and have run a bunch of research experiments to kind of max that out. So I do think that Llama 4 is going to be another big leap on top of Llama 3. I think we have a bunch more progress that we can make. I mean, this is the first dot release for Llama. There's more that I'd like to do, including launching the multimodal models, which we kind of had an unfortunate setback on that. But I think we're going to be launching them probably everywhere outside of the EU, hopefully over the next few months. But yeah, probably a little early to talk about Llama 4, but it is going to be awesome. And it has been one of the interesting things in running the company is basically planning out the compute clusters and data trajectories for not just Llama 4, but the next probably 4 or 5 versions of Llama, because I mean these are long lead time investments to build.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Just a significant amount of uncertainty in the risk-free asset class.
I do think the bond market is being used by people to protect portfolios.
The potential for an inflation boomerang next year is actually rising.
This idea that we're getting a soft landing has almost transitioned to the idea that we're getting maybe no landing.
There's still room for the Fed to implement a few rate cuts from here.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
90 minutes away from the opening bell, here's the state of play for you. Equity futures on the S&P 500 pairing gains over the last few hours, just about unchanged, even with a big lift for Alphabet after the close and through this morning, following some pretty decent earnings from them. On the Nasdaq 100, we're positive by 0.1%. On a Russell, the small caps down by about 1/3. On the earnings front, Alphabet yesterday, later on today, Microsoft and Meta tomorrow, Amazon and Apple. On the data front, a little bit later this morning, in 30 minutes' time, get another read of GDP for you. Then on to tomorrow, you'll get jobless claims. Then the big one on Friday, the payrolls report. The estimates are still coming into our survey. Just to give you another sneak peek of things, 110 is the median. 110 is the median. 254 is the previous number, and the range of estimates still really, really wide on Wall Street.
As is the range of ideas about how relevant this is going to be to the Fed or anyone else, given how messy it is due to the hurricanes and the strikes. We also get ADP in about 14 minutes' time, and I'm very curious to see whether that shows the same kind of confusion that we saw in the JOLTS data at a time where it really raises a question, is the Fed on autopilot to cut 25 basis points truly twice more this year?
JOLTS data, consumer confidence, really confusing. When you look at jobs plentiful, jobs hard to get, they're telling very different stories. Andrew Hollenhorst of Citi just publishing saying we expect 90K payrolls growth with downside risk and unemployment rate rising. If the unemployment rate rises for what they say 4.23%, or if unemployment rises regardless, that is something the Fed can easily lean into 48 hours after a presidential election where they may not know the result.
What's really strange about the consumer confidence numbers is this is meant to be the hurricane disruption numbers. These numbers are meant to be distorted, noisy, and they're strong. Which begs the question, if we get a strong print on Friday, how does the Federal Reserve respond to that at this meeting next week?
If they cut, you end up with a situation where the Fed cutting rates leads to a tightening in financial conditions. And this is something I've been thinking a lot about, because if you take a look at the rise in the long end, that could continue if they cut rates at a time when you are seeing ongoing strength in the labor market. And commentary like this from the Royal Caribbean CEO: we do not in any way see anything in the ingredients that say we are hitting some type of ceiling. If anything, we see continued acceleration in demand for our business, for taking cruises, for the travel and leisure sector. That's the reason why I think this is actually a really interesting moment with how the Fed responds.
For as long as people on Bloomberg surveillance refuse to go on a cruise, we have not hit the ceiling just yet. Still not going on a cruise. It's not happening. In the bond market, yields lower by 2 basis points on a 10-year 4.23 after breaching 4.30 briefly so far this week. Coming up this hour, Emily Roland of John Hancock as the Nasdaq hits a new record high. Claudia Sam of New Century Advisors looking ahead to payrolls, and Michael Kushmer of Morgan Stanley with treasuries on track for their worst month in 2 years. We begin this hour with stocks pushing just a little bit higher on the Nasdaq. Investors digesting big tech earnings and looking ahead to more economic data. Emily Roland of John Hancock staying cautious, saying we are not making big bets and would rather wait for some value in riskier markets. Right now, we would push against this reflation impulse in markets by putting cash to work in bonds. Emily joins us now for more. Emily, good morning. It's good to see you.
Good morning, you too.
Let's talk about some of these weird inconsistencies in this market, shall we? You've identified a few. Bond yields are up, oil backed away. There's one. Gold prices have rallied all year. The dollar's still strong.
Yeah.
What gives? How do you make sense of all this?
It all comes down to the election, and we're kind of process of elimination investors. When we look at this backup in bond yields, we want to see, well, is it commodity driven? Are we seeing inflation expectations increase? And in fact, there's a lot of signs of disinflation right now. We look at things like wage growth. That's gone from as high as 4% on average hourly earnings down to 2%. Initial claims still contain, continuing claims actually quite elevated. The quit rates come down. So the days, by the way, of leaving your job and finding another one to make more money, I think are behind us at this point. Another undercovered story, I think, is housing inventory. So inventories are up 23% year over year. We think that that shows continued disinflation in housing. Remember, shelter's been responsible for 60 to 70% of the gains in core CPI. So that is another element. And then commodity prices, I think with WTI now hovering around $70, that's not that bad. If you want to see another 1970s style increase in inflation, you've got to see that accompanied by a rise in oil prices, and we're just not seeing it.
Ian Lingan, BMO. We're sympathetic to investors' reluctance to challenge the prevailing trend. Do you want to step in front of this before next week?
We do, because I think there's an opportunity to lean into areas of the market that are mispriced. Look, there's some things we don't know, like who's going to win the election, and there's things that we do know. We do know that right now, bonds are one standard deviation cheap to their 20-year average, with the aggregate bond index yielding 4.7%. We know that stocks are expensive, 22 times forward earnings. I think that's being supported. I wanted to tie together what you were talking about with consumer confidence. If you look under the hood, the biggest categories that saw positive responses was, do you think the stock market's going to be higher a year from now? And are you planning to take a vacation to Europe? I mean, we're starting to lose one of the assets that this market has had, which is a lack of bullish sentiment. So we think about markets being priced for perfection, and bonds, they aren't.
Well, they might not be priced to perfection, but they do reflect something that does seem related to the Fed meeting, because 2 days before that September Fed meeting, we saw the cycle low, or at least the low, in the past few months, and then it was just a straight moonshot for yields higher on the long end. Do you buy the idea that in some way the Fed's 50 basis point rate cut actually tightened financial conditions because people are saying, okay, they're going to cut rates and they're going to keep rates at a higher level going forward, a higher neutral level, just because this is an economy with much more potential?
Yeah, it absolutely did. And I think the biggest transmission mechanism you're seeing through that is through the stronger dollar. The dollar strengthened rapidly. I think there is a political sentiment element to that move as well, but you've seen that tightening financial conditions. Now, the big question is, does the Fed actually need to continue to cut rates, especially if we see more fiscal spending? So that's been one of the biggest narratives and the biggest drivers of this move in bond markets. Maybe they don't, but because the political backdrop remains so uncertain, I think it's hard to really handicap what the Fed is going to do next at this point.
But if the Fed cuts by another 25 basis points next week, do you end up getting less bullish on duration because of this idea that in some ways they're going to allow growth to be a lot more robust for longer?
Yeah, not necessarily, because there's another component to the total return potential in bonds. The duration part, yes, you might have to wait to get paid on duration, but I'm okay waiting. You know, we've talked before about sort of bonds and chill. And I think that's appropriate for this because the income's so elevated. You know, you're looking again at a combination of high quality bonds. I'm talking about mortgage-backed securities, treasury bonds, investment grade corporate bonds, like single A. Nothing wild here. And that's going to get you income close to 5%. I'm comfortable getting paid to wait because even if bond yields rise modestly, maybe there is a little bit of a growth impulse after the Fed cuts again. You know, eventually we see bond yields falling and we're willing to be patient.
You're concerned about the election, the risk leading up into it, and potentially investors want to wait on the sidelines. Yeah. Is it because they want clarity, or do they need to know the composition of who's going to be in Congress and who's going to be in the White House?
I think it's both. I mean, certainly markets love clarity, and you've seen the statistics around markets tend to rally once the outcome of the election is known, and I think that's something that investors certainly want, although they're not acting like it. We're seeing massive risk-taking going on right now, things like cryptocurrency, and you guys have talked a lot about DJT and other sort of riskier, unprofitable corners of the market seeing this bid. And again, investors are becoming a lot more optimistic here, and I think we want to be back to the chill kind of part of this story. Like, why don't you have a portfolio? Maybe I'm thinking about this because there's a lot of states that are trying to legalize marijuana. I'm not really sure, but maybe you want a portfolio of high quality stocks. Maybe you want a portfolio of high quality bonds that can help us really navigate this really tricky environment that we're going to be in for the next couple of years.
If Trump does win, is there more to be priced in?
I think a lot of it's already happened. That's the thing. So we looked back at the market action post-2016, and what we found was that because we didn't know that that was the outcome, a lot of the move happened after the election. Small caps is one example. They were up about 30% in 6 weeks after the 2016 election. Bond yields moved meaningfully higher, but because the markets are really betting on the betting odds right now, we're seeing a lot of these moves already in the price. So there may be a buy the rumor, sell the news element here once we know that what the outcome is.
So could you just give us a sense of what chill looks like for you right now? Is it basically just go to work, buy some 10 years, sit back, go out to lunch? Is that basically what we're talking about here?
That sounds nice. We are considering legalizing psychedelics in Massachusetts, actually, so that could be another. No, I'm kidding. No, really, it's about
Senator Warren initiative.
No. Well, we can talk about that maybe on another show. But what we're looking at right now is, and I think this earnings season's reflecting what's been working in portfolios and where we've been overweight. It's companies with great return on equity, tons of cash, great balance sheets, a better ability to maintain margins. So we've been overweight U.S., we've been overweight U.S. quality and mega cap tech. That's where the earnings are coming from. Stock prices follow profits. That's where we're looking at in portfolios. And then again, getting out of riskier areas in the credit space, moving into high quality bonds. I think that's your narrative for the next, stretch of time.
When you speak to the pollsters, it's amazing. They'll tell you this race is still really close, and market participants are looking at the same market. It just feels like a classic example, and we cover this kind of thing all the time on this program. Price setting narrative. That's what it feels like in financial markets. It feels like the price is setting the narrative around the election. Then when you speak to the people who are basically employed to follow the said election, they'll tell you it's still really close.
And then there are questions around whether there are people manipulating the price to try to set the narrative and then have that turn into some sort of cyclical prophecy. But that's the reason why people are pushing back now.
And we've also seen that before in the past cycles when it comes to the betting markets. There was a Romney whale. Romney lost. He never saw the West Wing. So you have to take all of this with a grain of salt.
And just quickly, not sure, and yes, not sure about stocks, but yes, Europe and vacations. Emily, thank you. Emily Rowland of John Hancock. Had to squeeze that in. Let's give you an update on stories elsewhere. With your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. BYD notching a win against Tesla. The Chinese automaker reporting revenue quarterly that beat Elon Musk's company for the first time since the pair have gone head-to-head in global EV sales. BYD revenue actually fell short of estimates, but it still beat Tesla in the period ending September 30th. BYD has been more insulated than Tesla as demand for EVs have waned. Boeing and striking workers resumed talks yesterday in an effort to end the 7-week-old strike. In an update on social media, the union said it had a productive face-to-face meeting with the company to address key bargaining issues. The strike is taking a toll, though, on Boeing. Instead of generating cash in the fourth quarter, the company now expects to burn through around $4 billion. 26 North founder and multi-sports team owner Josh Harris joined David Rubenstein for an interview marking the 10th anniversary of peer-to-peer conversations. They discussed the future of public and private markets, alternative assets, and how he's preparing for the U.S. presidential election.
If you have a candidate that is more regulatory-oriented, that might affect certain industries like energy or healthcare differently. The antitrust policy could be different. That could affect acquisitions. So you have to think about all that and just be prepared for it. I think that if there's no outcome, clear outcome, could create some volatility. That may be a buying opportunity.
To see more of that interview with Josh Harris, tune in to the David Rubenstein Show, Peer-to-Peer Conversations, tonight at 9 p.m. Eastern, right here on Bloomberg TV. And that's your brief, John.
Danny, thank you. Up next on the program, the Morning Calls Plus. We'll get you some ADP data. That's all coming up next on the program.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Just to mix things up, an ADP report for you. Here's Mike McKee. Good morning, Mike.
Good morning. 233,000, which is a significantly higher number than was anticipated. The forecast was for 111,000. The September number revised up to 159 from 143. Remember, we had a major increase in jobs in the month of August and September, where we saw jobs rise by 223,000 in private payrolls. That's the comparable to the ADP. So this is a number that does suggest some real strength in the labor market that maybe hasn't been expected.
First question, what happened to the hurricane noise that everyone's pricing in for Friday?
Well, here's the thing about the hurricanes that we don't know is the timing effect, because the hurricanes hit on sort of either end of the reference week, which is the week that includes the 12th of the month. And so if you worked at all, if you worked an hour, then you would be counted as employed. And so it is very possible that the people from Helene got back to work, a number of them, and the people from Milton hadn't yet lost their jobs in the meantime. So that's something we're going to have to keep an eye on Friday when we get the numbers. And usually the Bureau of Labor Statistics puts out a little note that says how much they think the hurricanes impacted the jobs report.
So this is above all estimates by Bloomberg. This is the highest level for ADP going back to July of 2023. And we're looking at a time where people are wondering what the overlap between ADP and the labor market report that we get on Friday is. A lot of people say it's not very much. And then what kind of tell factor this is going forward. What's your read, especially with the new methodology for ADP, in terms of how significant it is for broader macro data released by the U.S. government?
Well, what ADP has done is backed off the idea of trying to predict what the labor market report is going to be, and just sets this up as a separate data series that in many ways is similar, constructed in a similar way to BLS. It just uses ADP's payroll numbers instead of the surveys that the government does. And so it tracks, it's much better what we end up getting, but it doesn't give you an exact number. You can't say, because this was 233, we're going to get a very high number, but it does suggest that we may get a higher number than is anticipated, which is at the moment 110,000.
Unlocked some high yields at the front end of the curve. We're up by 3 basis points on a 2-year at 412.50, unwinding some of the rally that we saw further out along the curve. The 10-year had yields lower by 3 to 4 basis points earlier this morning. Yields now just a little bit higher on the session. If we're looking at the economist estimates, we were looking for 111. We got 233. And if you're looking for the estimates on Friday, this is precisely why the range of estimates is so wide by about 190K, 180 at the high end from Mizuho. Lisa, -10 at the low end for Friday from Bloomberg Economics.
You asked earlier, what would the read-through be to markets if it was an upside surprise? And that, I think, is an increasing possibility that we have to think about with this ADP report that is not predictive, but does indicate that strength that we also saw, depending on what you wanted to look at in yesterday's data, considering it was all over the map.
You mentioned the hurricanes. We also have the Boeing strike, and ADP finds 19,000 manufacturing jobs off the payroll, which could be related to that, and 37,000 additional construction jobs, which could be related to Hurricane Helene.
Mike McKee on the random number generator this Friday. We're looking forward to this, aren't we? This one's going to be noisy. Equity futures on the S&P 500 just about unchanged. Let's get you some morning calls. Just the one stock in focus now. Alphabet, first up, Morgan Stanley, raising its price target to 205. The analyst highlighting the impacts of Gen AI. That stock is up by close to 7%. Your second call from Barclays, lifting its price target on the tech chart to 220. The analyst saying that while the AI story is progressing, shares could remain choppy. And finally, Baird lifting its Alphabet price target to 205. The analyst noting that AI resources can boost further market share in advertising. Let's stick with tech. More results coming after the closing bell, including from Microsoft. Joining us now to discuss is Anurag Rana of Bloomberg Intelligence. Anurag, we've heard from the likes of Alphabet. What do you think the read-through is, if any, for the likes of Microsoft a little bit later?
Yeah, for both Microsoft and Amazon Web Services, we think the bar is high now. They really need to beat by a big number to show that they are also getting the benefit of Gen AI workloads.
Some of the improvement to productivity that we've seen already has been absolutely staggering. This came from Alphabet's numbers yesterday, that new computer code is written by AI, more than a quarter of it. More than a quarter, Anurag. Are we already seeing some big changes, not outside of these companies, but inside of these companies?
Yeah, we have been saying this for a while, that when you look at Gen AI use cases, The biggest one in our view is code generation by some of these co-pilots. We recently had Amazon Web Services on one of our podcasts, and they talked about a massive shift in productivity on their back end as well.
At this point, Anurag, how much of a tell is Google for Meta, for the likes of Microsoft?
I think when you really think about it, when it comes to the benefits of Gen AI, cloud providers, I think, are one of the biggest ways to look at this stuff, because there are companies that cannot run these Gen AI workloads internally, which is they don't have the capital to go out and buy GPUs, AI servers, then hire people and do this internally. It's much easier to go to a cloud provider and just outsource it there.
At a certain point, Anurag, then, are you saying that Google's gain is also a gain for Microsoft and will also be a gain for AWS of Amazon? Or are you saying that it's really who can be the best at AI to really attract that type of clientele?
Yeah, our thesis is that when you look at this space, I think the entire space balloons up or expands in market. So any of the top 4 vendors, and I would include Oracle in that too, would be beneficiaries of this shift as more and more people move their workloads from on-premise to the cloud.
What's going to happen with hiring? Anurag, I really want to understand that. Can we just spend some time on that? How many people are these guys going to hire in years to come? How much of a problem will youth unemployment be in years to come because of the productivity initiatives they're developing and pushing across the companies across Silicon Valley and beyond?
Yeah, that is, you're absolutely right. That's one of my biggest issues right now is I'm not seeing the same level of hiring that comes with the revenue growth rate. If you go back a few years, and again, I'm talking even before pre-pandemic time period, there was a large correlation between revenue growth rate and headcount growth rate. But for the last, I would say, 1 year or so, I'm not seeing that, and that's a bit concerning for me, not just for unemployment or employment, but also for application software companies that really sell their software to not just technology companies, but other companies as well, the likes of Salesforce and Workday that are priced on a per-seat basis.
This, Lisa, is going to be an issue for society. It is a society issue, a societal issue right now, I think, and not just for this industry. You're going to see this on Wall Street too. And this goes back to a conversation we had with Brian Moynihan of Bank of America at the start of the year. This is going to help you grow revenue. How labor-intensive would that revenue actually be? And basically the pushback we got was pretty clear. We're not going to have to hire the same amount of people to generate the same dollar revenue improvement, incremental improvement that we're going to see potentially over the next few years.
Yeah, Brian Moynihan is saying that his staff will be the same size, even as the business continues to grow. A real question here about what kinds of jobs are going to be necessary. Jamie Dimon was talking about how he doesn't know exactly what that will look like for JP Morgan, but he does know that the mix of jobs is going to change, and he's already seeing that now.
Anurag, great to catch up, sir. Appreciate your time. Anurag Rana there of Bloomberg Intelligence on the latest for Microsoft. On the jobs front, no problem with jobs right now, according to ADP. 233, the number, the estimate 111. Looking ahead to payrolls Friday, we're looking for 110. I just wonder how many people sort of bumped their number up after hearing from ADP this morning.
ADP used to be dismissed as not predictive, as Mike was saying, of the non-farm payrolls report, and so people wouldn't pay attention to it. Now, increasingly, it has taken on more import, as it actually tracks better once you look at the revisions than it has in the past. A real question here about whether we continue to underestimate the strength of the U.S. economy at a time of ongoing muddiness in a lot of the data.
Mike McKee, you've got a final word on the data you just saw.
Yeah, we did find a little bit of a hurricane effect in east south central part of the United States, a loss of 13,000 jobs. So that's probably hurricane related, but we did lose 6,000 jobs in New England, and I'm not sure what that's about. The weather was really nice in September.
How did you process the data from yesterday, the contradictions that we saw? For JOLTS to be that poor at a time when the payrolls number that month was so good?
Well, I think that it's a reflection of it. I mean, if more people get hired, there are going to be fewer job openings. So, they don't match up exactly.
You don't think that's a reflection of cyclical weakness then, the numbers we saw yesterday?
It's too early to say with just one number. What was really interesting is consumer sentiment. Why is that rising? It's maybe due to the election and the fact that maybe everybody's happy it's almost over.
Well, I'm sure that a lot of people would be sympathetic with that, but you have to wonder, which is more accurate, the JOLTS data or the consumer sentiment survey that's been whipsawing? I mean, this is a far cry from what we saw the last read?
Well, I would focus on the consumer sentiment number, jobs diffusion, jobs hard to get versus jobs easy to get, and the jobs easy to get went way up. The diffusion widened, and jobs hard to get went down. And that's always been a pretty good indicator, whereas JOLTS now only has about a 20% response rate, so it's not considered perhaps as accurate as it used to be.
Mike McKee, stick around. We've got some breaking GDP data in just a moment, and the latest numbers from the Treasury. Claudia Sahm of New Century Advisors and Michael Kushner of Morgan Stanley here to react from New York. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
So moments ago, about 15 minutes ago, we had a big upside surprise on the ADP employment change report. That came in at 233. The estimate was 111. In just a moment, we'll get you some GDP data and the latest numbers from the Treasury refunding announcement. So here are the scores going into that. Equity futures on the S&P 500 shaping up as follows, just about unchanged. Likewise on the NASDAQ. As for the Russell, we're a little bit softer by 0.25%. In the bond market, following that data this morning, yields up at the front end by 3 basis points at about 4.13. On a 10-year, just about unchanged on the session now at about 4.25. With some economic data, let's cross over to Mike McKee. Hey, Mike.
Well, we've got the GDP numbers out. 2.8% for the third quarter is the initial estimate. That's just a touch below 2.9%, which was forecast. And one of the things that happened, of course, we had a 3.1% forecast from the Atlanta Fed. And the problem is then we had that big trade report yesterday as everybody tried to bring in inventory ahead of the port strike. And so that is probably subtracting from growth. We'll get that number for you in a moment. Personal consumption, though, very strong. 3.7%. That's up from 2.8% in the second quarter. Americans are still spending money. The GDP price indexes, which are quarter over quarter, so not as important to the Fed as the one we'll get tomorrow, 1.8% for the GDP headline index. That's down from 2.5%. We're in the ones now there. And core PCE on a quarter over quarter basis, 2.2%, down from 2.8%. Now, the one other number, the information we want to give you is the quarterly refunding from the Treasury Department. This one has very little change in it. It isn't going to be very exciting to the folks on Wall Street who pretty much called this. $125 billion is going to be offered, refunding $116.4 billion, $8.6 billion in new cash. Bill auction sizes stay the same through November. There'll be modest reductions in December and then increase in January. Treasury does not anticipate increasing auction sizes the next few quarters. And what we have for refunding is 3-year notes, $58 billion, 10 years, $42, and the 30-year bond, $25 billion. And we got the kind of standard warning ahead from the Treasury Borrowing Advisory Committee that the debt limit, which we will hit at the beginning of next year and has to be passed again, it could screw everything up in the Treasury.
We might be turning the volume up on those issues over the next 12 months as well. So Americans are consuming and investors are selling bonds. Yields are up by close to 5 basis points at the front end, almost at 4.15. Let's call it 4.14 right now. On a 10-year, we unlock high yields there as well, up by a basis point or two to 4.27. We had breached 4.30. We backed away in yesterday's session. We had seen a 6-day run of high yields at the front end. We snapped that yesterday, but it resumes this morning off the back of an upside surprise on ADP about 17 minutes ago. And Lisa, a pretty punchy personal consumption number just moments ago.
Yeah, the 1-2 punch of ADP coming out double the expectation, more than double the expectation, and 3.7% personal consumption just goes to this feeling, are we not seeing the strength in the U.S. economy that keeps surprising to the upside? That economic surprise index, that's what I was pulling up right now. We could see it continuing to climb to the highest level going back certainly to earlier this year, going back to April of this year. So it raises this question, are we also underestimating what we could potentially be getting on Friday or, you know, amid the noise, also what we get tomorrow with core PCE, because the core PCE also came in just slightly higher.
So this is why it's so difficult to try and understand, trying to unpack what is driving bonds here. The data, just a series of upside surprises, to your point, Citi going all the way back to April, or the politics. And the reason matters, and this was really the essence of Mohammed's piece yesterday on Bloomberg Opinion. He said the following: while most analysts agree on the list of potential contributors to this unusual development, there is little consensus on their relative importance. This matters for what we forecast about the future well-being of the economy and the sustainability of this year's impressive stock market performance. Are yields higher for good reasons, everything we just discussed over the last 15 minutes, or for bad reasons, worries about deficits and big sweeps leading to more debt?
And until we have clarity on that, do we just see the two markets trading into their own music? And that's essentially the question that Jack Coffrey was trying to unpack, and a real question here about higher yields in and of themselves can't torpedo stock market valuations if people can ignore the potentially bad reasons that they could be potentially rising.
Well, with ADP and GDP, we've got reasons for people to bet on the strength of the economy. Although the headline number was a little lower than anticipated, personal consumption, as we mentioned, is very high. But business investment is also strong, 3.3%. That's down from 3.9%, but it is still relatively strong for non-residential private investment. Structure's down 4%, and that was forecast because we had a lot of structure building, factory building. Now people are buying this stuff to put in those factories, with equipment purchases up 11.1%. The real difference here is in what we saw in trade. Imports were up by 11.6% of goods. What's interesting is they don't really show up in inventory, so we're not sure where they are at the moment. Inventory is 60.2 billion, and that should mean strength in the fourth quarter. Government spending was up 5%. national defense, a large part of that, up 14.9%. We're sending a lot of stuff to Israel and to Ukraine, so we're buying a lot of stuff like that. But then the final line you'd look at is final sales to domestic purchasers, gets rid of the inventory and trade numbers in there, and we're up 3.5%. Which is the strongest since last year.
Bond yields off the back of all of that of 5 basis points. At the front end, the 2-year, 4.15. Joining us now to discuss is Claudia Sahm of New Century Advisors, a good friend of this program. Claudia, welcome back to the show. Let's get into this economic data. How would you characterize the economy in America?
Good news is good news. I mean, this is excellent on the GDP, particularly when you look at the consumer spending. It's not just one quarter. We have now put together 4 quarters that are about 3% growth in consumer spending, inflation adjusted. And as Michael said, you put that together with business investment, right? Like, that's what we're looking for. Like, this is a really good report, and it's not one to be afraid of. The Fed is not going to be afraid of this report. We have supply coming online. We have productivity higher. Like, this really is good news.
Claudia, they might not be afraid of the report, but they could be potentially a little concerned about the response to the report in markets. At what point does it get the Fed's attention that longer-term yields keep climbing on the back of an ongoing string of better-than-expected economic data?
The Fed is going to be paying attention to what markets do, regardless of whether it's what they're expecting or what they're not expecting. It's hard to play three-dimensional chess with markets. There are a lot of factors that move markets. The Fed is an important player in the mix, but it's not the only. But it absolutely will be looking at interest rate sensitive sectors, places where it could go in, and if there needed to be some support, cut rates, get some support. But that's not what we're seeing right now. We're seeing a very strong economy, and what the Fed has to look for are any signs of it overheating. Right? Is that consumer spending? Is that demand that's really outstripping supply? And at this point, we really do not see signs of it. And we haven't for several quarters, right? Like this, we are in a trend place that is much better than, frankly, we went into the pandemic with.
There are 2 different arguments here. One is this question of whether we're overheating and thus causing the Fed to stop cutting rates. And the other question is, are we underestimating the neutral rate that we could potentially be looking at in an economy that keeps chugging along, even with rates that the current Fed says are significantly restrictive? So which is it, Claudia? Because there are very different responses on the Fed side to either of those 2 potential outcomes.
At the end of the day, we want the neutral rate as high as absolutely possible, because a high neutral rate is a sign of a healthy economy. The low interest rate economy that we went into the pandemic with, that was not a healthy economy. It created a lot of distortions, but it also was just a sign. Interest rates are a price. They are telling us something about the economy. And if it turns out that this economy comes out with higher productivity growth, higher underlying trend, well, we would expect that to show up with a higher interest rate, and it's an interest rate that we would tolerate. Like, it wouldn't be restrictive, it'd just be we have a stronger economy. Now, it is too soon to say that is what we have moved into. This still could be, working through some of the temporary disruptions of the pandemic, and we could go back to a lower trend growth. And I think Europe is very much a cautionary tale, right? They are not having this conversation of, have we gotten to this higher trend level? Is our star just so much higher? So there's still a lot in the mix, but again, where our star lands, I mean, that a high R star is perfectly fine, but we are in that process of discovery of, like, is this good news going to stick with us?
Well, when you say good news is good news, does it marginally increase your best guess about where the neutral rate is? Do you think that it's more likely around 4 now than 3.5 as the Fed's projecting?
I don't know if I go quite as high as 4. I think, into the solid 3% is what this looks like. And particularly, again, if the implicit productivity growth that goes with this GDP number and a labor market that, while still solid, has slowed down quite a bit, right? So we're getting a lot out of the resources that we're putting into the economy. And so if that continues, then yes, I think something in the mid 3%, probably maybe even higher, would make sense. But that's where I think the Fed, they have like their first 100 basis points, like the next 100 basis points, I think are pretty safe in the, like, that's still restrictive, we can chip away at that. And then you do get into a conversation as you get past that of, okay, is this where the economy wants to rest?
Claudia,
and,
If we're going to live with higher interest rates, what does that mean for the housing market?
Again, a higher interest rate environment, when it's behind it is productivity growth, you also have higher income growth, right? And so interest rates are a price, just like house prices are another price that people face. And what at the end of the day matters is the affordability, right? Do you have the resources to afford those homes? Now, of course, the higher interest rates do run into the fact that we have had a housing underbuild for quite some time. And so if you think that, if we're going to try and fix that underbuild just with market prices, so the adjustments of the interest rates, that one is going to be tricky. But I think there are certainly policy proposals on the table at various levels of government to try and work on housing supply and not think of it purely through interest rate mechanisms and what the Fed might be doing.
Right, but that could take years to come to fruition. So if you're sitting on a 3% mortgage and rates you say are going to be higher for longer, what impetus is there for those individuals to give that up?
There's not. I mean, that's what, you know, there are always, if there are big shifts in the economy, there are going to be winners and losers in terms of where they sat on like the bet, right, on the information when everything changed. So, you know, that's just a reality of how the economy works. It does mean the housing market went into the pandemic in a place of disruption because of the housing underbuild, and then it has been throughout this entire period in different forms of disruption, whether it was really fast-paced demand, really low interest rates, whether it was no inventory of housing, you know, so that is a extremely disrupted sector, not just because of interest rates. And I agree with you, there's no magic wand in that market. It's going to take time, and it's an extremely important one to get right-sized.
One thing I know for sure is that was personal to Anne-Marie, Claudia. She just wants to buy a house. That's all it's about. Is that what that was about?
It feels like the boomers, or those that time the market correctly, Lisa, are the winners, and then those that are younger trying to get in the housing market are the absolute losers.
Are we calling Bram a boomer?
No, I said those that, I know, I called her a winner for timing the market correctly.
I'm not sure, Bram.
I bought in April of 2020, so I wasn't going to rub it in, but yes. And
Why not? Why not?
Go
Since
for it.
we're being personal here, Claudia, can I just have one personal note, just quickly? We know you're in your own personal battle right now. And I just want to say on the behalf of all of us, and if I may, the whole financial community as well, because I've had a ton of messages just before you appeared with us. We're all thinking of you. We're all thinking of you, and we appreciate your time. We're lucky to have you this morning. Thank you so much for being with us. Claudia Sam there of New Century Advisors. Got some data a little bit earlier this morning. If you are just tuning in, welcome to the program. About 30 minutes ago, had an ADP report coming in with a pretty strong upside surprise. Mike McKee was breaking down GDP, and within that GDP number, personal consumption really strong as well. So at the front end of the bond market, bonds down, yields up just a touch. Michael Kusher of Morgan Stanley Investment Management joined us now for more. Michael, good morning.
Morning.
Seen a big move higher in yields over the last month. Do you want to step in front of this before we resolve the issues we have on the table next week?
It's challenging. It's challenging because they've been rising for all sorts of reasons. Data has been surprisingly strong. The market was long going into the September FOMC meeting, and given the information that the FOMC and Powell were providing to the market about what was likely to happen. So the market was overextended in terms of yields where they were. And then you got a sequence, a reversal of all this weak data. Now you got strong data at a time of bad market positioning. And then you throw in the election, the rise of Trump in the polls again, and the Trump trade, and those kind of things. Just in both, because we have term premium rising, taking out rate cuts, everything could go wrong for the bond market.
Quite a recipe. Can you break down the individual ingredients by measurement? How much of it is one versus the other? Do we know?
I think the first bit was just data. The recovery, like the 4%. 4%, I feel, has been a center of gravity for 10-year yields, all year long. We started the year at 390. 4 is not that much different at the beginning of the year, despite the roller coaster along the way. Rising since then, we got up to 430 on Monday. I think the last 10, 15, 20 basis points are around auctions, auction-size deficits, and secondly, the potentiality that ex-President Trump may win again and implement bigger deficits, higher inflationary policies in general, raising term premiums. I think it was a half and half to some degree.
Do you think that it's gotten over its skis in terms of the election-related trade?
I think when you see a sell-off of 65 basis points in a matter of weeks when the Fed is cutting interest rates is extremely unusual. And this gets back to the interactive fiscal and monetary policy since the pandemic. And one reason why we had this surge in inflation was super easy monetary policy and super easy fiscal policy. And since then, monetary policies had to work against still relatively easy fiscal policy. So it has a headwind to work with, which is one reason why higher rates have not caused as much economic weakness as anyone thought several
I guess,
quarters ago.
how do you parse out whether this truly is the bond vigilantes coming back and raising concerns about the deficit versus yet another overreaction that is an incredible buying opportunity?
We don't think it's an incredible buying opportunity, but it's getting back to reasonable levels. 450 on 10-year treasuries looks pretty good from a long-term perspective. Even if you think the long-term neutral interest rate is 2%, throw in 2% inflation, a Fed funds of 4, 10-year at 4.5 looks reasonable.
Is this the ceiling if Trump wins and there's a sweep on Tuesday?
No, I think it's close to higher than that. At least the initial reaction.
How much higher?
Well, we peaked. We almost got to 5 back in 23, briefly, before we got weaker inflation data and everything kind of looked rosy again. I think 5 is the absolute worst it could be.
So if Harris wins, there's gridlock or a sweep, how much do yields fall? Or they don't, because people are still pricing in fiscal stimulus regardless.
I think either party wins or takes control of things, you will get no deficit reduction going forward. Both parties have platforms to stimulate the economy, to help various components of the economy based upon their agendas, and that's probably not going away one way or the other. But I think the simulations I've seen, if you take the platforms and implement fully each platform, Trump policies are a little more inflationary, a little bit worse for the bond market, maybe up to 5%. It doesn't mean that the economy won't do okay, just the reaction of interest rates will be along those lines. And for Harris, a little bit less, but basically for most outcomes, interest rates a little bit higher. But also remember, term premium was really suppressed. Term premium bond yields went down a lot during the post-global financial crisis world with all the QE and everything. And now we're seeing gently, slowly rising term premium, which may not go away. So that's that upward pressure, which could come in fits and starts. It's not going to be uniform. Could be part of that process of normalizing things.
What gives you confidence that this time is different with respect to bond vigilantes coming back to a market that has faced off with a pretty big deficit for a long time in the U.S.?
I think it's because foreign investors, non-U.S. investors, and the Fed, the two combinations, we're thinking about central banks, including the Fed, plus foreign investors, own most of U.S. Treasuries. The U.S. Treasuries are the global risk-free asset. It's the global store of wealth. We park billions of dollars. There's no alternative to that. So you could suffer you could move shorter in the yield curve, do things like that, but I think there's no real alternative to Treasuries, and that will keep the yields could be gently rising, but won't disrupt the market.
Here's something you don't hear much on the campaign trail here in America. Over in the UK, Chancellor Reeves delivering the budget at the moment, saying this budget will raise UK taxes by 40 billion sterling. Gilt yields has been rising going into this budget. They're actually falling today by 7 basis points. The picture for the budget and fiscal prudence is very different over in Europe, isn't it? The approach is shifting big time.
It's extremely good. We know the UK has been very sensitive to ever since when Liz Truss was prime minister back in that September 22, I think it was, when chaos erupted in the gilt market in the UK on the back of potential fiscal irresponsibility. Other countries do pay attention to that, but I would say a country like Germany overpays attention to it. Yep. They do the opposite. They are too conservative.
A lost decade, I think, in Germany.
And
a lost decade of opportunities, big time. Michael, thank you, sir. It's good to see you. Could talk about that a long time. Michael Cushman there of Morgan Stanley Investment Management. Let's give you an update on stories elsewhere with your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. Alphabet shares jumping 6.7% pre-market. The Google parent company reported healthy gains in both revenue and profit. The company showed that its expensive foray into AI is starting to pay off, noting that a quarter of new code at Google is being written by AI. It delivered better than expected traction for its cloud computing business and drove more usage for its flagship search engine. Shares of Eli Lilly, on the other hand, tumbling this morning nearly 11% after lowering its full-year guidance. Sales of the blockbuster weight loss drug Zepbound and Mounjaro both coming in well short of forecast. Lilly blamed inventory issues for the miss. Shares of rival Novo Nordisk also falling in sympathy with those shares this morning. Now, regardless of the outcome of the World Series, Fox and MLB are surely looking like the winners. Game 3 averaged 13.6 million viewers, beating Monday Night Football. It's the most watched World Series in years, averaging 14.4 million viewers a game, that according to Fox. Meanwhile, in Japan, the series is averaging almost 16 million viewers, even more than here in the U.S., equivalent to about 12% of the country's population. And that's your brief, John.
Danny, thank you. Thanks for this morning. Up next on the programme, we'll set you up for the day ahead and look ahead to more big earnings after the close. We'll touch base with Bloomberg's Ed Ludlow in just a moment.
Is the Vivian Tom clientele? Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world. Why do you position your products for this group of women? When I started, designing, I always want to do something that is empower women. When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example. My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, they feel that the power, the energy. So now they come back to the store and they buy more.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
The equity pop just fading a touch over the past few hours, slightly negative on the S&P 500 with the opening bout 36 minutes away. As we count you down to the opening bout, here's the trading diary through to next week. Meta and Microsoft reporting after the closing bout Thursday. More results from Apple, Amazon, Intel. We'll also get a BOJ rate decision plus another round of jobless claims and core PCE on Friday. The payrolls report on Tuesday, as you know, the US presidential election followed by a Fed rate decision just 2 days later. Investors in the meantime keeping an eye on big tech earnings after the closing bout. Ed Ludlow joins us now for more. Ed, before we look forward, let's look back just a touch. Sure, what are the nuggets, your big takeaways, the highlights from Alphabet?
Well, you'd be forgiven for having a sense of deja vu, right? Because the calculus is the same this quarter as it was when the last time the four of us spoke last quarter, which is, here's all the money we're spending on AI in terms of CapEx. And fortunately for Google, this time around they had something to show for it, right? $2 billion of operating income for the cloud unit, 35% top line growth for the cloud unit. I think what's so interesting about Google is it's cultural, right? It's kind of ubiquitous, but we have a better sense of why they're doing well, which is that their strategy on cloud is to talk to startups run by people that used to work at Google. And there's evidence that our search, or use of Google search, is actually now adding higher value through the AI investment. So it was fascinating and they delivered.
Did you see an election tailwind in there for ad spend?
Yeah. Yeah, and it's so important. They were explicit about it, right? Strength in advertising sense on financial services and insurance industries, but the consumer's strong. The retail segment for Google was strong, and they said, yes, there is a tailwind from election season. They didn't quantify it, but like this is important stuff, right? Because we're less than a week out, and people look for information. You'd think that Google would be the main beneficiary of that.
We'll see if this shows up in Meta a little bit later. Ed, appreciate your time, sir. Looking forward to the program, 11 a.m. Eastern Time, alongside Caroline Hyde, Bloomberg Technology, Microsoft, and Meta after the close.
Yeah, I think that's a fascinating point. How much do some of the social media sites get even more benefited by some of the ad spend than even traditional media?
For me, it's still 6 days to the U.S. presidential election. All I'm looking at is whether or not we're going to see more unforced errors on both sides of these campaigns.
A week of damage control so far. Up next on the program, Laurie Calvasina of RBC, Libby Cantrell of PIMCO, Pierre Ferragu of New Street, and Lindsay Rosner of Goldman Sachs joining us tomorrow morning. Looking forward to that from New York City. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
What would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever, S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
There are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
All right, we had a big beat yesterday by Google, but the chip stocks are disappointing this morning. 30 minutes until the start of trading. I'm Matt Miller.
I'm Shonali Bassett. And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
And coming up, Alphabet's AI bet starting to pay off, but AMD delivers a disappointing forecast. Next up, Microsoft and Meta take the earnings spotlight.
A shocking miss from Eli Lilly, the drug maker, lowering its guidance because of lackluster sales of its blockbuster weight loss drugs.
And amid this earnings rush, investors also wading through a raft of fresh economic data. The U.S. economy expanded in the third quarter, powered by a resilient consumer spending, a big beat there. All of that and more coming up. Let's take a look at where markets are trading 30 minutes until the bells ring. Pretty quiet. You have a real tug of war going on underneath the surface. Of course, that beat by Alphabet, but a miss by AMD, at least how investors are receiving it. The S&P 500 down about 0.1%. The NASDAQ 100, this was your big surprise winner yesterday, rising nearly 1%. You wouldn't know it looking at the trade today, currently off by about 0.1%. The bond market, pretty quiet, of course, waiting through that economic data as investors are. You had those ADP figures coming in really strong, GDP strong as well, and PCE as well. Put it all together, actually, yields rising a little bit to unchanged territory. Camped out about 4.25% on your 10-year yield, Matt.
All right, well, economic growth looks strong, especially if you look at the labor market right now. This is ADP, and of course, it's hard to directly correlate that to non-farm payrolls, but the beat was more than twice what was expected by our survey of economists. So the U.S. economy continues to add jobs, and those workers continue to spend money, but maybe not on Zepbound?
Not on everything. Very excited to talk about that push-pull between the economic data and the stocks to watch. Eli Lilly now down more than 10% pre-market. Remember, it lowered its full-year guidance after sales of Zepbound, like Matt was saying, they fell short of expectations. The company blames it on inventory issues. Also looking at a bellwether here, Caterpillar down almost 3% pre-market. Third quarter profit on weakening demand in construction around the world. Really disappointed there. You're seeing it down about 2.8% pre-market. Alphabet, that's your bright spot. 6% higher in pre-market, seeing growth in search and cloud businesses. As bets on AI begin to pay off, Matt, it really raises the question here if the Mag 7 are the safe haven, the place to hide. Finally, real quickly, single stock story, we're going to take a look at Super Micro because it says that Ernst & Young, its auditor, resigns amid a review. EY had communicated several concerns about several matters related to governance, transparency, and completeness of communications in July. Supermicro now down more than 30%. This is a stock also fighting off a short seller report, Matt.
I will say, although I know it's not proper Spanish, that's no bueno, honestly, when your auditor resigns, and no wonder the shares are selling off. We had a couple of other misses. AMD was a miss on revenue, we were looking for $7.55 billion. They came out with $7.50 billion. I feel like it's pretty close.
The company also said that it now expects to get more than $5 billion in sales from its AI accelerators. They actually raised that from their previous forecast. It just wasn't enough. You have sky-high expectations for these chip makers, these chip designers. As we've learned, Google, though, Alphabet, actually, you're seeing those AI investments pay off. A totally different story from what we were talking about 3 months ago.
And you know, it's interesting. I know that the focus will be mostly on the Mag 7, like you're talking about. You also earlier this morning pointed out Caterpillar. My eyes are on it, too, because you had great economic data, but you have a tough signal in a bellwether stock here, missing expectations.
Reddit, by the way, set to hit a record high in today's trade.
Social media in general.
Yeah.
Snap is also doing well, really sets the stage nicely for Meta after the bell.
Because I think, and we can get Mandeep's take on this in just a moment, I think that these AI large language models are scraping Reddit data, and maybe Snap as well. I don't know how to use that.
I'm sure Reddit would love that.
Let's dig into these tech moves with Bloomberg Intelligence senior analyst Mandeep Singh. He joins us here on set. He knows everything about these companies, and we'll start obviously with Alphabet, parent of Google, revenue up 16%, and the cloud is really, Google's cloud business is taking business away from Microsoft and Amazon's cloud business, right?
Yeah, I mean, it's 2 out of 2 for Mag 7. So we had Tesla and now Alphabet. And look, with Alphabet, I think you're seeing not just cloud, but also search. I mean, think about it, $200 billion run rate business growing at double digits. And also, they're deploying Gen AI at scale. No one else in the consumer arena is deploying generative AI the way Google is. They rolled out AI overviews to over 1 billion users. So that just goes to show how they are doing it successfully without any impact to margins. In fact, the big beat was on the margin side. So all in all, it was a great quarter. I think that they were under a lot of pressure because everyone thought they are losing share in search. They proved the naysayers wrong.
Who would be taking share in search? What else do you do besides
Bing?
Google something?
Microsoft's
Really?
Bing, with that big NVIDIA investment. Yeah, the narrative was there, but another narrative that's interesting this morning is basically hardware versus software. When it comes to AI, hardware has been in charge in the stock market, but today you're sort of seeing the reverse dynamic, of course, with Alphabet and with AMD.
Yeah, so Alphabet had their new CFO for the first time, and she said she's going to focus on costs. So she kept the CapEx in line with consensus, no major CapEx increases. So that was nice. And also, I think with AMD, the problem is they keep touting how big the data center market is. But when you compare them to NVIDIA, which will print, $30 billion in data center revenue, that number doesn't sound like they are catching up when it comes to this CapEx wave. And that's where I think there are some skeptics around how big AMD will get when it comes to, participating in this Gen AI chip wave.
It's interesting. If I don't ask you about Snap and Reddit, I think Matt would be very upset at me.
I want to know, right?
I think I do too. And so at the end of the day, Snap is actually doing quite well in the pre-market trade, up about 5%. I can see it right now. What's driving it forward?
I mean, with Snap, it's all relative to expectations, and their ad business grew 10%. When I look at Google growing, 13% in core ads, which is 20 times, 30 times bigger in magnitude, it's not a great print, but relative to expectations, they did well. And Reddit, I mean, as you were calling out, clearly their corpus that they have is quite, something that everyone wants to deploy.
When you say corpus, this is a word I heard yesterday, analysts throwing around. That's Latin for body. What are you talking about?
Well, it's the data set that they have, which they are selling to these companies, whether it's OpenAI, whether it's Google, Anthropic. Everyone is training their large language models on the data corpus. And that's what it comes down to when it comes to training these models. And training is not a one and done thing. You have to keep training these models again with fresh data. So think of Reddit as the place where the content gets curated, and then these companies train on that data, and they're selling their data right now.
I feel like there has to be a less creepy word than corpus, but we'll work on this.
Yeah.
You and I, we'll work on this. Mandeep Singh, it's great to see you, of course. Mandeep Singh of Bloomberg Intelligence. And let's broaden out this conversation now with Truist co-CIO and Chief Market Strategist Keith Lerner joining us now. Keith, it's great to have you. We are in the thick of it when it comes to earnings. And it's interesting, we're talking about a big beat on Google, of course, Alphabet, and then you take a look at the disappointment in AMD. You added together the S&P 500 pretty much unchanged this morning. When you look at the sea of earnings we've had so far and the push-pull relative to expectations, where does that leave you?
Yeah, well, first, great to be with you all. We are in the middle of earnings, but the next 2 weeks is almost like a Super Bowl, right? We have the earnings, we have the employment report, we have the election, we have the FOMC meeting, we have China stimulus news. So it's really going to be a jam-packed few weeks. On the earnings side, overall, we are seeing some divergences, especially as you mentioned in tech. But I think all in all, what we focus on is the forward earning estimates for the S&P. And as there's been, movement back and forth among the economic data on what people's views of the Fed is, forward earning estimates have climbed all year long, and just this week have made another 52-week high. So I think the underlying story for earnings is still positive. But what we are seeing, the nuance is that you are seeing things where there's more divergence, even within semiconductors, as you mentioned, where where companies are more leveraged to AI. You're seeing that side of the business really strong, and other areas which may be more globally leveraged, maybe a little bit less strong.
I noticed that, things are priced to perfection, right? AMD barely missed on revenue, $7.5 billion instead of the $7.55 billion we were expecting. And as Katie pointed out, they raised their forecast for their AI chips, but the market still was disappointed. I think they were trading at like 90 times or 120 times earnings, as opposed to the 60 times where we see NVIDIA. Are you worried that these prices are a little frothy, Keith?
By most historical metrics, valuations are somewhat rich. But I would say, as I look at the broader market, and especially technology, the technology sector as a whole, the earnings strength, the earnings momentum is still stronger than the overall market. So yes, valuations are high, nothing like the technology bubble as we look back, even though there may be select cases. But as long as those earnings in aggregate continue to move higher, I think tech is still a good place to be. And to broaden this out a little bit too, our view, we upgraded tech in August on the pullback. And our thesis is that the bull market is still intact, right? The way the evidence in our work suggests that the bull market is intact. The theme of this bull market is still AI and technology. And if you think the bull market is intact, I think you have to believe the AI theme is still also intact. And we do, supported by those earnings and some of those secular trends. But it's becoming a bit more divergent underneath the surface at this point.
So AMD, Shanali, is actually trading right now at 140 times last year's earnings compared to 66 for NVIDIA. If you look at estimated earnings, they're both trading about 50 times.
Fascinating. I will be watching the Philadelphia Semiconductor Index today as it trades. But, it's interesting. I want to move away from tech for just a second. We have Nick Colas from Data Check on this program a little later. I can cite him today a lot. I guess he's on with us today. Yeah. He says something interesting about this unproductive tug of war between cyclicals and defensive stocks that makes it difficult to find the equal weight S&P reliable. So the broadening trade outside the Mag 7, are we going to walk out of this earnings season and say Mag 7 is safety, everything else is, like he says, unproductive?
Yeah. Well, first, I know Nick, and he does a great job. Really respect his work. As far as, I don't know that's unproductive. We prefer the market cap relative to the equal weight. The equal weight from a portfolio context does provide some diversification because you're not so concentrated. But the reality is the earnings growth, what we just talked about, are still in these Mag 7. That's where the majority of the earnings growth for this market has been. So that's why we still, on a relative basis, prefer the market cap base, the market cap index. I will say, though, we are overweight tech. We are also overweight financials, right? Financials have a bigger weight in the equal weight index. Financials just made a new high over the last week. Relative prices have been improving. And if the economy stays resilient, which it has been, and we've seen that today with the ADP report, credit should remain relatively firm. Hopefully, we'll see a little bit of a pickup in M&A. So, and the consumer is still very healthy. So all in all, I would say, yes, stick with the S&P, but are there opportunities beyond tech? Our answer is yes.
Keith, great having you on the program. Love to get you back in the studio. Keith Lerner there from Truist down in Hotlanta right now. We'd love to get you back up here in New York. Coming up, we're going to talk about drugs. Eli Lilly shares are down bigly as Zepbound revenue falls short of expectations. No, wait. Is that the intraday trade from yesterday?
That is. We have the
No, we should look at the pre-market trade from today. Eli Lilly currently
down 11%.
Thank you very much. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that, have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Let's get to high interest now. Look at what's making headlines around the world. UBS posted a surge in third quarter profit that beat expectations. The bank now has delivered 3 profitable quarters. The CEO, Sergio Armati, did warn about looming risks. He sat down with Bloomberg's Francine Lacroix.
The markets are pricing rather a Trump victory, and think that if this is confirmed, it remains to be seen. Is a classical sell-on news event, or how he wins will be also determining, is he in control of the Congress? If Kamala Harris wins, of course, some of the trades that are ongoing for Trump will probably have to be reconsidered, and therefore they're going to create rotations in the market.
Meanwhile, slightly north, Volkswagen's profit plunges. The automaker's operating margin shrank to the lowest since the pandemic, forcing the car maker to idle production and shutter showrooms. VW is looking to reduce wages for around 140,000 workers in Germany by 10%. That adds to the woes of an already weak economy there, although it didn't fall into a recession. An estimated 12% of Japan's population is tuning into the first World Series for baseball star Shohei Ohtani, but one group is missing out. Traders in Tokyo are banned from accessing their mobile phones due to compliance rules while they're at work, forcing them to check the news on the terminal or wait until they get home. Ohtani's Dodgers lead the series against the Yankees now 3-1 after the Yanks won last night. Shonali?
If I were them, I would definitely check the score on the terminal, Matt. Anyways, one stock we're watching this morning is pharma giant Eli Lilly. The stock plunging pre-market after lowering full-year sales guidance by $600 million. The cut spurred by disappointing sales of its weight loss drugs, which the company blamed on inventory issues. Here with more is Bloomberg Health reporter Madison Muller, covers this company and the entire industry very closely. And it wasn't just Zepbound, it was also Mounjaro. What's going on?
Yeah, so, analysts were shocked this morning. I think investors, too, clearly, from what we're seeing with the stock reaction. And we were all really surprised, too. We have seen Lilly consistently beat estimates. Zepbound sales have soared since the drug launched in November. And what we're sort of trying to figure out this morning is what's going on with this inventory issue. The company said that this isn't a result of weaker demand. It's more that inventory channels were selling less of the drugs, so that those inventory channels decreased this quarter. I spoke with CEO Dave Ricks this morning, and he again reiterated that this is an issue with retailers and wholesalers, and that they are keeping less supply of the drug on hand at a time compared to other medications, just keeping lower levels, and that's sort of what's happening. But I think analysts are still a bit confused and will be looking for more information on the call later this morning.
Yeah, the inventory story was kind of shocking because the narrative up until this point was that there's a shortage of these drugs. They can't make them fast enough. And Eli Lilly in particular has spent $10 to $15 billion in the recent past just to boost that capacity. And it's strange that it switched so quickly.
Yeah, and Lilly is saying that they are planning to make more of these drugs in the fourth quarter, and that they're on track to meet or exceed their goals that they set at the beginning of the year to increase production capacity by 50%. So they are making more of these drugs. They're not considered to be in shortage anymore. And so the question is really, what is dragging down sales? Is it this inventory? Is it actually weaker demand? Some analysts now questioning this morning whether compounded, these knockoff cheaper drugs are actually eating into Lilly's sales, which is something that, you know, before was not really on their minds. They were like, there's no way. And Lilly's still saying they're selling as much of these drugs as they can possibly make.
Well,
but
I mean, I have been trying to get these drugs.
Some on-the-ground reporting.
Yeah, my doctor tries to help me, you know, make the right pitch to the insurance company. The insurance company says no. I try a few more times. I'm back at square one, and then I'm thinking, why don't I just call one of these off-label, you know, pharmacists online and get them? I'll say, look, I'm 5'3" and 250.
I would say Matt's insurance company is spying on him, but he says on air routinely that he's eating a pint of ice cream a day.
And I mean, but the point that you raise is like exactly what so many Americans are going through right now. They're like, we've tried to lose weight for decades, can't lose weight, have, you know, issues with their heart, issues with blood pressure, all, you know, blood sugar, all of these things. My insurance company won't cover it. There's this easier to get, cheaper, knockoff version. Only have to pay $150 a month. They'll send it straight to my door. That is an appealing pitch to so many Americans, and that's why we're seeing hundreds of thousands of people use these drugs.
Right. I have to imagine it's very frustrating for Dave Ricks. But just quickly here, 30 seconds left. What does this say potentially about Novo next week?
Yeah, so Novo is going to be reporting next Wednesday. Analysts questioning this morning whether we're going to see something similar happen with Novo, or if this is just sort of like a reaction to the surprise of this inventory issue, which might have just been because analysts were expecting such high Zepbound sales, which might not be as much of an issue for Novo's drugs.
Wait, we didn't get to the whole Alzheimer's. You and I were having this
we were
kind of
having
debate
this
on
robust
Alzheimer's.
discussion.
The next set of uses.
Yes.
Right, I know, but we are up against the clock here, so we'll just have to have you back. Madison Muller,
exactly.
of course.
Anytime.
Yeah, she covers healthcare for Bloomberg News, and of course, Novo shares down in sympathy about 2.8%. Now, coming up, of course, as mentioned, we'll continue the conversation on Big Pharma next Wednesday with Novo Nordisk CEO Lars Frogard Jorgensen. Really looking forward to that conversation. Before we get there, though, immediately on this program, we'll talk about Chipotle. Stock is slumping after same-store sales disappoint. More in Social Climbers next. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
right, it's time now for Social Climbers, the companies making waves this morning. And first up, Corvo plunging in the pre-market. The company forecast revenue and profit fell far short of estimates, and that weak guidance really highlighting fears regarding smartphone demand on reports of order cuts by Apple, which is Corvo's biggest customer. Shares down 21%. Next up, let's talk about Chipotle, reporting third quarter sales missing expectations. The company also forecasting fewer new restaurant openings for next year than analysts were anticipating. You can see shares off about 4% before the bell rings. And finally, Super Micro Computer plunging in the pre-market. This after the company says that Ernst & Young has resigned as auditor amid a DOJ probe. EY communicated concerns about several matters relating to governance, transparency, and internal control over financial reporting in late July. Remember, they were also targeted by Hindenburg, so quite a timeline here. You can see shares down almost 31%. We'll continue to follow that one and all the latest company buzz on TRE and Go on your Bloomberg terminal. Meanwhile, let's get a quick check on futures right now ahead of the bell after some pretty hefty earnings last night. Some hefty earnings still to come. You can see shares off slightly across the indexes, a little bit more if you take a look at the small caps. 4 minutes to go until the opening bell. Stick with us. This is Bloomberg.
What's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google public, so I had a little sneak preview.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
We are moments away from the start of trading after the first of, I think, the real Mag 7 companies reported. Google beat expectations yesterday, not lifting futures. You can see that we have red arrows, however slight they may be in terms of futures. We're down less than 1/10 of 1% on S&P futures. NASDAQ futures surprisingly down even more, Remember, AMD missed slightly. Eli Lilly, I'm going to say, shocked the market with a miss in terms of sales of its Zepbound drug, as well as Mounjaro. Now on Broadway, there's some actors ringing the bell at the New York Stock Exchange. Down at the NYMEX, Astoria, U.S. Quality Growth Kings ETF ringing the bell there. It's almost like an ad we're doing for them, but it's not, because I don't really know what they do. In terms of the markets right now, we're looking at a flat day, but it's going to be very interesting to see which way we go, Katie Greifeld, because we had a beat by Google, and AI looks strong even at AMD, though they missed on overall sales.
It says a lot about this market that's just not enough, because you take a look at what we're dealing with right now. We're flat to down, I would say, on the S&P 500, down about 0.1%, and then it gets worse from there. NASDAQ 100, which houses all of your big tech names, off about 0.2%. Of course, we have Meta after the bell, Microsoft coming up as well. So we'll see how this particular index changes. But then you cast your eyes to the small caps, also not having too hot of a day, currently off about 0.3% on the little guys. Meanwhile, Matt mentioned it, so let's go there now. Eli Lilly lowering its full-year guidance due to disappointing sales of its weight loss drug, Zepbound. A really shocking miss here, coming down to inventory, which is really surprising. This was a company that was dealing with shortages. No longer. Shares currently off about 11%, Shanali.
I've got a miss on my side as well. I'm taking a look here at Caterpillar, missed earnings estimates amid uncertainty around the U.S. election and the company's largest market, as well as growth concerns in China here. You have shares down almost 5% as the market opens. Of course, not a bellwether of the economy a little bit here.
Yeah. It's the biggest, the world's largest maker of earth-moving equipment. Thank you very much. Finally, let's take a look at Alphabet shares. Of course, the parent company of Google reporting strong results on the heels of its big bets on AI, highlighting better than expected traction for its cloud computing and search businesses, taking business away from Microsoft. It's taking business away from Amazon, partly because it's hired or been hired by so many of the AI businesses that it's spawned. We're going to take a closer look at the tech sector right now in terms of earnings. For that, we go to Bloomberg's Abigail Doolittle. Good morning, Abigail.
Good morning, Matt. And before we take a look at Alphabet and what's happening there, take a look at AMD, down more than 8% this after. They put up an inline quarter, so it's interesting. They actually beat sales by about 1%, but the guide is what folks don't like. This is the worst day since July of this year, and now, very interesting, on today's tumble, this stock is close to being down on the year. It's probably up 2 to 3%, which is really pretty incredible for a stock that a lot of people think of as a high flyer. But in any case, the guidance not impressive for this current quarter, a little bit light, especially the AI component. As for Alphabet, take a look at where they beat. You were talking about the cloud. It was also the advertising and the search, really nice beats here. So Alphabet up more than 6%, the best day going all the way back to April, so investors pretty impressed there. As for what's next, well, after the bell today, we have quite a big parade of earnings, including Microsoft and Meta, and then tomorrow we are going to have Apple and Amazon. So this Mag 7, well, this really seems to be the big 3 days here for these names, Matt. Katie.
I mean, you know, either one of us
We're all
works.
at the same desk.
That's true. Yeah. We're all sitting next to each other. Abigail Doolittle, thank you so much. Let's keep the conversation going now with Korean partner and wealth advisor Amy Kong joining us. And Amy, we're talking a lot about earnings, but we also had a lot of eco data out this morning before the bell. You think about what we learned when it came to ADP, more than double estimates coming in. You had annualized GDP, still strong, a little bit soft, but then you take a look at consumer spending, for example, coming in really, really hot. When you think about the landscape here, the economic landscape, and you marry it together with what we're learning from corporate America, what's your risk tolerance right now?
Thanks for having me, and good morning. I think the economic data points that you've highlighted suggest that the economy, the U.S. economy, is still chugging along. GDP numbers were, again, in between that 2.5–3% level. It really suggests that the market remains quite resilient. And I think that is obviously a good sign. Moving forward, the more important of an implication is what the Fed will do. And I think that monetary policy will certainly be a big driver in terms of stock prices moving forward. All of this, to me, suggests that the Fed has a little bit more flexibility to continue to lower rates.
But why, Amy? I mean, with the markets at record highs wherever you look, with earnings beating expectations, with the consumer remaining strong, economic growth over 3%. Why would they need to cut rates? I mean, what are they even restricting right now?
I think the environment today, where rates were at 5.25% and now at 4.75%, it remains very restrictive. And it was an environment that was used to combat inflation.
But where do you see that restriction? I hear that from a lot of people, but what is it restricting? Because it's not restricting the way I spend money. It's not restricting CapEx, right? It's not restricting stocks.
It is restrictive to an extent. I think to your point about restricting in CapEx, maybe we're not seeing that with regards to AI-related CapEx. We're certainly seeing that there is probably more of a risk of underspending in AI than overspending. But it is restrictive when you look at, for example, the real estate market, where there continues to be almost like a freeze, where buyers are on the sidelines waiting for rates to come closer to levels that we saw a couple of years ago. I think there are pockets of the economy where it is restrictive. And so, again, with regards to the positive data news on the economy, it again just suggests to me that the Fed can continue to lower rates. They're mindful that the monetary policy works in lags and in variable measures. And so they just certainly don't want to be, again, risking having rates too high for too long.
You know, it's interesting. Speaking of the CapEx spending and questions around AI, you know, not all companies are created equal. Some will spend more than others. We'll see that through the earnings reports. Want to pull up the Philadelphia Semiconductor Index at the moment, because you are not only seeing a decline on the heels of those AMD earnings, among other news, you're also seeing every single stock in that sector right now in the red today. How does this really kind of kick us off into this part of earnings season, where we're starting to get a better picture of what that CapEx spend really looks like, and to Matt's point, whether it is getting more restrictive or not?
Yeah, I appreciate that question. And I think in general, when we're looking at the 20-30% of the companies having reported already, the results from the last quarter were fine. I think it's really the expectation going forward that's causing some of these stocks to pare back a bit. And this is certainly a risk that we're seeing in the marketplace, where the S&P 500 is trading at a forward multiple of close to 21 times at this moment. And so in general, I think your question is really stemming on, what should we expect going forward? I think the AI spend is likely to continue, but I do believe that expectations have gotten ahead of itself. And this is where, again, I wouldn't be surprised if the markets take a little bit of a breather again, because of some of these corporate announcements suggesting, again, guidance coming down just a tad.
And Amy, before we let you go, just quickly here, I want to talk about the election. We are 6 days away, and you have the sell side notes coming out fast and furious. You had Citi out today saying that in the event of a rally in a Trump win and a red sweep, that's something that you should fade. I'm curious about your positioning, how you're feeling heading into this election, given all the volatility, all the building of this so-called Trump trade that we've seen.
Yeah, absolutely. This is obviously a very sensitive time for investors, for Americans in general. From my perspective, and purely really from an investment standpoint, I would look at the elections from two lenses. The short term is absolutely there will be some bumps along the way. Headlines will drive the market one way or another. But really on a longer run, and I'm looking back at data going back to the 1950s, quite frankly, the returns of the stock market when there is a presidential election versus when there hasn't been, has been comparable. And so that just tells me that the market over the long run should be able to offset some of the challenges that we're seeing in the election season. And while there could be some offsets, meaning capital tax, corporate tax, could go higher, et cetera. I think ultimately companies have been very good with using their balance sheet to innovate, to drive earnings higher, which again has been more than an offset to some of these macro challenges. And so I would certainly not be making major investment decisions based on the election alone, but certainly would look at companies that can continue, to benefit from the AI trend, from the idea that rates are moving lower, from the idea that the economic data points, while strong now, could moderate. I would certainly look for those trends when making decisions in client portfolios.
Amy, we thank you so very much for your time. Of course, that is Coriant's Amy Kong. Now we're going to check back in and shares of Reddit, because you do actually have this stock tripling since its IPO price just back in March. It's now trading at $110. And of course, Reddit just beating on the earnings front, capturing that AI story, capturing that advertising spend.
They're the corpus.
They're the corpus.
Yeah, and it was their first profit, and that was a surprise in and of itself. So interesting, though, that it's prompting such a big reaction. That's all good news, but geez Louise.
And you have to wonder if it's good for other IPO stocks. Other side of the story, Supermicro, down even more than it was before, down more than 30%. Their auditor is stepping back at this point after that report about the DOJ also taking a look at what's going on there as well. We will see how the story goes.
And a short?
And a short.
I know. So it's interesting. You think about all the heat that the short selling community has taken.
Hindenburg put out a report.
Exactly.
If Hindenburg puts out a report on your company and then your auditor quits,
it doesn't look great. Well, then the DOJ gets involved and then your auditor quits. You add it all together. It's not super good.
Despite all that, Hindenburg already made money, honestly, because they were up more, almost 200% halfway through the year. Now they're only up 15%.
I mean, don't they usually close those shorts out like an hour after they publish?
That's what I've been
Some
asking
of the
as well.
Allegations.
Anyways, coming up, a conversation. We're going to go over to FII, the CEO of Riyadh Air from the Future Investment Initiative over in Saudi Arabia. We're going to bring you that conversation next. This is Bloomberg.
In case you missed it, on Bloomberg Technology.
We're excited to really change the expectations for space companies where you have this always-on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid or of your cell phones. And so we think that this is a huge opportunity space, and our first contribution to it is through shared infrastructure.
You can see this whole ecosystem developing, and you have an exponential growth right now because easier access to space means more demand for space, and that's the definition of an exponential growth function. So if you think about someone like Varda, who is only possible now because access to space is cheaper and easier, we're demanding more access to space.
I think that's what's so exciting from a business perspective, is the fact that if you can do it, you're one of the few numbers of organizations in the history that have actually pulled it off. And so it creates a very defensible position, because again, space is very, very hard.
Don't miss Bloomberg Technology live every weekday.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
And Saudi Arabia's new carrier, Riyadh Air, just announced that it's ordering 60 A321 jets from Airbus. Bloomberg Horizons anchor Germana Bersecci is with us with the CEO from the Future Investment Initiative Conference in Saudi Arabia. Germana.
That's right, guys. Thank you so much. Tony Douglas, the CEO of Riyadh Air, is joining me right now. Some breaking news with this announcement. You will be purchasing 60 of the A321neo aircraft. And of course, those are manufactured by Airbus. This is coming as a bit of a surprise because many people had assumed that you were going to go after the Boeing 737 Dreamliners. What happened?
This is Riyadh Air, and we're absolutely delighted that here at FII today, we've just announced 60 A321neo family aircraft, and we'll be taking delivery in the second half of 2026, and that takes our committed orders to date up to 132 aircraft. So special day for us, but it was a doubly special day because we've also announced our version 1.0 of our digital app, and this is the first for commercial aviation. It's got more in common with Uber, Amazon, Noon.com, so we're super excited. We've had a great day.
Yeah, big announcements on your side, but also probably not a great day for Boeing. This comes as a bit of a snub to them. How did management react to your decision to go with the Airbus narrowjets?
Well, I think most airlines like to have a balance between both of the big manufacturers. We've already placed an order for 72 787 Dreamliners. So for us, the right aircraft in the narrow body space was the A321neo. It's an incredible aircraft from an environmental performance, from an overall cost efficiency standpoint, but for us, most importantly, guest experience. So special moment in our time.
Can I just ask you, though, whether some of the factors that have been pulling back at Boeing over the last couple of months were factored into your decision-making, talking about the strikes and several incidents that have happened? Is that a factor to your decision not to buy the Boeing jets today?
So it's not been a factor. This is a commercial campaign. It's obviously around availability. It's about pricing. But most importantly, it's about performance. And for us, the performance of the 321neo family is exceptional because there is a regular 321, there is a long-range variant, and there's an extra long-range variant. So that gives us the flexibility in terms of how we configure to the missions that we want to operate. And I think most modern airlines are of the view that this is an exceptional platform.
Yeah. Could there be more narrow-body jets ordered from Boeing in the future, or is this it for now?
So we're going to move on to a third campaign. So obviously the narrow-body order that we've announced today, we're absolutely delighted by, but we're very soon going to move on to an extra wide-body campaign. So more to look forward to from a Riyadh Air standpoint as we build up to going live next year.
Yeah, and indeed, are you concerned about the deliveries of some of these jets? Because you also have the wide-body jets and they're set to be delivered. Are you concerned about some of the delays with those deliveries?
So the aviation manufacturing sector, everybody sees the challenges that are there at the moment within the supply chain. And, you know, we're very focused working with both Boeing and now obviously Airbus. And they understand that we're a startup. We don't have a plan B. We're not like a legacy airline where existing leases we could extend or we can play around with the network, which of course neither exist. So both of these manufacturers we're working very close with.
Can I just ask you one last question about Boeing? Because they have been set by so many challenges. What do you think is needed to right the ship there?
So look, I think Boeing is an incredible organisation, over 100 years old. The world needs a strong Boeing. The USA needs a strong Boeing. The travelling public needs a strong Boeing. And of course, so does commercial aviation. They will come good. They're having a real tough time at the moment. They'll go back to basics, become engineering-led, and they'll get strong again.
So let's talk about the actual launch of the airline. You hinted at some point next year. Can you give us a little bit more color as to when exactly it's going to be operational?
So I'm hoping when you and I are sat maybe here at FII next year.
Well, hopefully we'll speak before then.
You've been sitting in seat 1A on the way here, so we're super excited.
Okay, so Q4. I'm going to say Q4 next year.
Into next year.
And then how do you see it working out with Saudi Airline? You've got obviously Riyadh Air, which is a new entrant to the Saudi airline market. How do you see the coordination with Saudi Airline, which already exists?
So we work very closely with Saudi Air. Obviously, we'll have two international carriers of the kingdom. And over time, as we scale up, Saudia will transition to hub out of Jeddah, which has always been their hub. And obviously that's conditional upon us getting a fleet that gives us connectivity to the moment we're underserved to. So you can't fly directly today from Riyadh to Tokyo, to Shanghai, to Sydney, to Seoul, and that's totally unacceptable. The market's there, the demand's there. As soon as we get these deliveries, we'll make sure we put an incredible product on to the traveling public.
And just final question for you on how easy or how challenging has it been to attract the right talent and the right personnel for the launch when it eventually happens?
So we've had a very pleasant surprise. On our website, riadair.com, there is a careers page. It allows pilots, cabin crew, engineers, all manner of different skills to apply. Up to now, in 18 months, we've had 1.4 million applicants, 143 different nationalities, and of course the question is why. And the only way I can actually answer my question why is because the brand is Riyadh, it's a startup, and what it stands for is energetic, it's vibrant, and it's digital.
Well, there you go. Tony, thank you very much for speaking with us today. We really appreciate it. That was Tony Douglas, the CEO of Riyadh Air. Of course, not just one, but two big announcements from the airline today. I'll toss it back to you.
All right, Jumana, thanks very much. And thanks also to Tony there of Riyadh Air. Coming up on this program, BlackRock is in advanced talks to make moves into the world of private credit. Probably not a shock, but you'll want to know the details, and we'll bring them to you in our Wall Street Beat next. This is Bloomberg.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, is emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about.
Time now for the Wall Street Beat. Today, we're looking at BlackRock. The world's largest asset manager is in advanced talks with private credit firm HPS Investment Partners for a potential acquisition. BlackRock looking to compete in the booming industry of private credit. Guys, this is a long awaited deal because we have been chasing across the entire year a potential IPO for HPS. HPS spun out of JP Morgan. Scott Kapnick is kind of a legend. He was a creator, really, of this industry. And you got down this road where they started to have acquisition talks with BlackRock being kind of the king of the castle.
Right. Well, it makes sense that BlackRock would go after them. You think about this big push that BlackRock has been making into private assets. Remember, just a couple of weeks ago, it completed finally its acquisition of Global Infrastructure Partners. I mean, you add it up together, BlackRock is going to have hundreds of millions of dollars in private assets just through these acquisitions alone.
It's interesting, Matt, the acquisitions that they've made have already been worth more than $15 billion this year alone. So this would add another $10 billion to that sum. It's just incredible.
Chump change, though, right? I mean, it adds $100 billion in assets.
It adds $100 billion in assets and gets them into a stronghold. And Katie covers this really closely too. This idea that if they have a private credit firm, then what can they do?
They can make a lot more money. This is
ETFs. And ETF.
And ETFs too. But you think about even before we get to ETFs, which are probably going to be lower cost. You think about how much BlackRock makes per dollar of AUM. Their annualized fee rate is like 15 basis points. You compare that to Apollo. Apollo's annualized fee rate is 52 basis points, even though Apollo obviously has a much smaller pie of AUM. They just are able to charge a lot more on these private assets.
Is that also because they do so many ETFs? I mean, that really brings down what you make per dollar.
The margins on ETFs are very, very tough. So it makes sense that BlackRock wants to diversify here, and they're paying up to make money.
And this doesn't immediately meet the eye either, but by getting private credit here, a lot of those infrastructure deals and places they're edging into in private markets, they dovetail. It helps them add more debt capacity to deals like that.
All right. You know why 7 o'clock is when I really start to do research?
Tell me why.
That's because at 7 o'clock every day, DataTrek's note comes out.
That's true.
And that's when I really lock and load in terms of researching for the show. We finally have Nick Colas himself on the program. He's coming up next along with Lumen's Kate Johnson and Senator Tammy Baldwin. This is Bloomberg.
Like, let's say somebody is an Uber or Lyft driver today, where they can actually sort of manage a fleet of cars and sort of manage, I don't know, 10, 20 cars, and just sort of, take care of them like a shepherd tends their flock. You have a little flock of cars, and you're the shepherd, and you take care of your flock of cars. I think that would be pretty cool. I think it's going to be a glorious future. It's going to be really something special. So, yes, good, all excellent questions. So we do expect actually to start fully autonomous, unsupervised FSD in Texas and California next year. And that's obviously, that's with the Model 3 and Model Y. And then we expect to be in production with the Cybercab, which is really highly optimized for autonomous transport in probably, well, I tend to be a little optimistic with time frames, but in 2026. So, yeah, before 2027, let me put it that way. And we'll make this vehicle in very high volume, and but well before that, you will experience a robotic taxi via the Model 3 and Model Y program, and Model S and X too. But the your 3 and Y will achieve unsupervised full self-driving with permission in wherever regulators essentially approve it in the U.S. and then to follow in outside the U.S. So, and it's Cybertruck too. Yes, of course. Sorry, I don't want to forget. Yes. All our cars are basically all cars that we make. So.
All right. So all of a sudden, we're seeing these data points coming out, going, "My gosh, why haven't we're owning this space?"
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Many voters will head to the polls next Tuesday with one thing top of mind, the economy. New government data show it grew at a slightly softer but still strong annual rate of 2.8% over the summer. Jared Bernstein is chair of President Biden's economic advisors.
We don't want to read too much into one report. These numbers bop up and down, but the trend in inflation has been easing.
CBS News business analyst Jill Schlesinger.
Remember that consumer spending does make up about 2/3 of economic activity, so the fact that consumers are spending really did propel growth in the third quarter.
Both presidential candidates take their campaigns to battleground states today. Kamala Harris and Donald Trump both begin in North Carolina. The vice president moves on to Pennsylvania and Wisconsin, former president to Green Bay, after he called out President Biden for referring to Trump supporters as garbage.
Please forgive him, for he not knoweth what he said.
Mr. Trump reaching out to Latinos in Allentown. President Biden later clarified he was referring to racist remarks made by a comedian at a Trump rally in New York. Democratic vice presidential hopeful Tim Walz tells CBS.
The frustration with Donald Trump's rhetoric of division, it does fire passions. And I think President Biden was very clear that he's speaking about the rhetoric we heard.
Brand new consumer protections let you get your money back right away when your plane is stuck on the ground. Correspondent Chris Van Cleve.
As of this week, flyers are entitled to an automatic refund if their flight is canceled or significantly delayed. What is a significant delay? On a domestic flight, that's 3 hours or more. On an international flight, it's 6 hours or more.
Big weather changes on the way in parts of the country after a record warm spell. Meteorologist Stephanie Abrams.
The strong storms are going to fire up in the center of the country this afternoon and get more intense as we head into the evening. Thunderstorms continue overnight and into tomorrow from the Midwest to the south, but thankfully they won't be as potent.
Overseas, at least 64 people in eastern Spain have died in flash floods. More teenagers are spending more time on devices.
I check my phone every at least 10 to 20 minutes.
The results troubling. Correspondent Alexander Tin.
Just over 50% now say they are spending at least 4 hours of every weekday on their screens outside of schoolwork. The CDC survey also found that rates of anxiety and depression were higher for these kids. More than a quarter of teens with at least 4 hours of screen time reported anxiety or depression.
Dow up 112. This is CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fats?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. Alex Steele is out today. Not to worry, Jess Menton
Bloomberg News.
It's going to be fun again. We just got that pending home sales data, though, if you take a look at this. Rising 2.2% from the previous year. So biggest jump in 4 years, and homebuilder stocks moving higher after a big decline yesterday.
Interesting. All right, good stuff. We got that coming up. We're going to talk to Mandeep Singh, Bloomberg Intelligence, get the latest on those Google earnings. Tiffany Wade, Senior PM at Columbia Threadneedle, get her market call. We're also going to take a simulcast with Bloomberg Television. Democratic Senator Tammy Baldwin of Wisconsin speaks with Bloomberg Television anchor David Gura. That's live from Green Bay, Wisconsin, so we'll tap in to that and see what they have to say there as we approach Election Day. Let's kick this whole thing off here for the next couple hours with a Bloomberg Business Flash. John Tucker's got it.
Hi, guys. This Market Drivers Report being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. Let's start with this, kind of obvious, the most active stock, Super Microcomputer, those shares down 25% right now in the early going. I can actually say that's pairing some of the earlier losses. Ernst & Young resigned as the auditor to the troubled server maker. They're citing concerns about the company's governance and transparency. And then after the close yesterday, we got the results from Alphabet, to Google's parent, of those shares this morning. They are up close to 6%, revenue jumping 16%, third quarter net income of $212 per share, also far exceeding the projections. And then this morning we heard from another result when Eli Lilly, those shares down 12.4%. They lowered guidance due to lackluster sales of the weight loss drugs, Zepbound, and the diabetes drug, Mounjaro. They missed estimates by nearly $900 million. They're blaming that in part on inventory controls. And then the economy, we got figures on GDP this morning. The economy expanding at a robust pace in the third quarter. Household purchases accelerating ahead of the election. The federal government also ramped up defense spending. Inflation-adjusted gross domestic product increasing at a 2.8% annualized rate. S&P 500 right now is up 7 points. That's a rise of 0.1%. The Dow Jones Industrial Average up 148 points. That's a rise of 0.4%. And the NASDAQ Composite Index after yesterday's record close for the NASDAQ, right now 32 points higher. That is up 0.2%. Real quick, yields, the policy sensitive 2-year, that's up 2 basis points. We'll call it 4.11 right now. The 10 up 3 basis points. That's at 4.22. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Hi, Jess and Paul.
Hey, John Tucker, thank you so much. We appreciate that. Jess Metton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Red headline crossing the Bloomberg terminals. The Supreme Court lets Virginia purge voters before election. So Virginia canceled registrations of an estimated 1,600 residents. So that's just crossing the terminal. We'll have more reporting on that throughout the day. As John was just reporting, got a little bit of a lift here to the market here, slightly across the major indexes. Let's see what's happening underneath the hood with some of the individual names. Lots of earnings out there today. Carmen Reineke, she covers the equity markets for Bloomberg News. She joins us here in our Bloomberg Interactive Broker Studio. Carmen, what are you looking at?
Yeah, I mean, the one that everyone's looking at today is Supermicro, SMCI. Shares are down about 25% right now. Earlier, this actually was paused for volatility. The company's auditor, Ernst & Young, resigned. This comes about a month after the U.S. Justice Department launched a probe after an ex-employee claimed that the company violated accounting rules. One thing that I also think is important to note here, so Hindenburg Research put out a short report against this company in late August, and a day later, the company said it would delay filing its annual financial disclosures. So a lot going on at SMCI. One thing that I do think is kind of interesting is it's still up about 27% year to date. So this stock has had a huge run, and now we're really seeing some of the air come out of it.
Back in March at $180.
It did. Well, it was added to the S&P 500 this year.
Right. I wanted to pivot to the big tech stocks since we have you here again. I know you've been watching that closely. Of course, we have Microsoft, Meta. After the closing bell today, reporting earnings, and we'll have Apple and Amazon tomorrow. But of course, we had Alphabet after the closing bell yesterday. So walk us through some of the pricey AI bets that are starting to pay off with the cloud.
Yeah, I mean, Google's looking really good. It's up almost 6% right now. It's the best day since April. investors are really happy here. It looks like AI is sort of paying off. The CEO said that Google reduced the cost of producing AI answers in search by over 90% in 18 months. I think that's really huge. And I think that there could be some positive flow through to some of these other big tech stocks. I mean, as you're saying, we have Microsoft and Meta tonight. These are companies that have also spent substantial amounts on AI, and investors really want to see if they're starting to see results from that. Meta last quarter had a good report and sort of investor reaction after showing some like optimism around that. So we'll see if they can do it again. And then really, yeah, the story kind of continues for Apple and Amazon tomorrow. Those companies are a little bit more nuanced. Apple, we're really looking at the iPhone sales. Obviously, that is still linked to AI, but it's a little bit different. And then Amazon, honestly, really looking at AWS. The cloud is the big driver there.
Yeah, and then the worst performing sector today is healthcare, and of course that's dragged down by Eli Lilly, LLY, so the ticker symbol down about 12%. Worst day on pace for that if it holds those losses to the close from October of 2008. So what happened here, and why is it down so much?
This is a big surprise. The company lowered its full-year sales outlook and specifically cited lackluster sales of the weight loss drugs. So that's Zepbound and Mounjaro, which have been just a huge blockbuster for this company. I mean, we know Ozempic is the other one from Novo. Nobody can get enough, right? Everybody wants these drugs. They seem to be everywhere. So it was really surprising to investors that they said that sales have not been so good and that they were going to cut their outlook here. So that's really what the stock is reacting to.
Yeah.
And the next hour, we're going to have Sam Fazeli, Bloomberg Intelligence, healthcare analyst from London. He's been covering this company for decades. He'll join us to break it down, what's happening with the friends at Lilly. Carmen Reineke, thank you so much. We appreciate that. Carmen Reineke, she's over at Bloomberg News covering the equity markets. We appreciate getting a few minutes of her time. Again, slightly increased levels here in the markets. The S&P up about 0.1%. The NASDAQ up about 0.25%. We're right smack in the middle of earnings season. This is the busiest week of the quarter in terms of companies and market cap reporting. Big one last night. Our friends at Google.
That's right. Over 30% of the market cap for the S&P 500 is reporting this week. Okay. Right.
Excellent.
Yeah, busiest week for earnings season.
Good quarter, I guess, across the board. Mandeep Singh joins us. He's a senior technology analyst for Bloomberg Intelligence. Mandeep, everybody knows Google. They know the search story. What did you learn last night from Google and their results?
That, search, cloud, YouTube, these are three separate businesses doing extremely well at scale. I mean, double-digit growth for search business is really stellar when you think of all the pressure they've been facing, when it comes to new entrants like ChatGPT and Perplexity and whatnot, and everyone is of the belief that they would take at least some share from Google. At least in terms of ad revenue, Google hasn't lost any share. In fact, it's a very healthy growth at their scale. And YouTube, look, 50 billion plus revenue run rate, 70-30 split between subscriptions. Ads is 70 and 30% is subscriptions, and subscriptions grew 28%. I mean, just think about $15 billion subscriptions business growing 28%. That's very impressive. So, and we're not even talking about Waymo here. So when you look at, all the businesses, they clearly have a lot going on, and Waymo is a future bet, but something that could be huge in terms of, top line.
What's interesting, you just mentioned 50 billion of run rate revenue for YouTube and advertising subscription. That sounds a lot like the cable television business, the cable network business. I look at Paramount Global, all those cable networks, they have 30 billion of revenue. Oof. So YouTube is significantly bigger than some of the largest advertising and subscription-driven media companies out there.
Yeah.
In a dozen years. It's just extraordinary.
And Mandeep, you were talking about these massive investments that Google and Alphabet, obviously the parent company, has been trying to catch up to the likes of, obviously, Microsoft. We'll get another update from their earnings after the bell, and of course, OpenAI. Walk us through some of those investments and how they're starting to pay off.
I mean, look, in the case of Alphabet, they have huge data center investments simply because they have a giant infrastructure that's powering, these big businesses. So there's a lot of internal consumption of these chips, but also the cloud business, which saw a nice acceleration, sequential acceleration from 29% growth to 35% growth. I would say a lot of that is driven by the availability of GPUs in their cloud. So I would be interested in seeing how much of Microsoft GPUs are being used for internal consumption versus what is being exposed on their Azure cloud. Because in my mind, Google having their own chips is making a difference in terms of their cloud growth, and that's why you saw that acceleration. But I'll have to validate that tonight.
How is AI impacting John Tucker, Jess Men's search results
these
days?
I mean, just the nature of search is changing in the sense you can ask, a lot longer queries. The prompts can be infinite in length. You can, have a video or an image prompt. It just doesn't have to be text. So that's what Google called out, that the queries are getting a lot more complex in nature, and users are actually engaging with it. So it's not as if, that's driving them to some other platform. Users want to use what they call multimodal search, which is a combination of text, videos, and images, and audios. So that's why these LLMs are so powerful, because they give you that innate capability to search in whatever format you want, and you can just throw it in that search box. So that search box is getting a lot bigger and a lot more complex on that Google page.
So what do we need to watch for with Microsoft today?
I mean, Azure growth. I said, the availability of GPUs is what is powering Google Cloud's acceleration. I want to see that acceleration in Microsoft's Azure growth to confirm that Microsoft is not losing share to Google, or for that matter, Amazon, which reports on Thursday.
And tomorrow on Surveillance, tomorrow morning, we're going to have Dan Ives in studio from Wedbush Security, so he'll be doing, presumably, a victory lap for
Why can't Mandeep dress like Dan Ives?
Right, I was about to bring up the, what kind of bright colors Dan might be wearing tomorrow.
Mandeep, because it takes an effort here. He matches his turban, Mandeep's just saying for those on radio can't see, he matches his turban with the suit every day. Every day.
Sharp.
So that is solid. I give him credit for that. I mean, anybody can walk in here with like a pink tie and everything.
We all know how Paul Sweeney's the fashion police here. Paul Fashion Police Sweeney of Bloomberg News.
There is a dress code that I enforced at Bloomberg Intelligence.
Those summer Fridays, I remember. I think someone came in with flip flops, and they had a stern warning from Paul about that.
Can we all agree no flip flops in the workplace? John Tucker, you're with me.
All right, I'll go along. Although I do have
he's got the casual
duck
on. That's how as casual as Tucker gets. Mandeep, thank you so much. We appreciate it. Mandeep Singh, he covers all the technology. He manages all of our technology coverage globally for Bloomberg Intelligence. And obviously, technology is a global business. Asia is such an important part of the technology stories in terms of not only an end market, but a source for a lot of that technology and manufacturing. And we've got a big team out in Asia for Bloomberg Intelligence. And Mandeep manages all that for us. So he's our go-to person. Coming up here, we're going to check in with Tiffany Wade, Senior Portfolio Manager at Columbia Threadneedle, to get her thoughts on these markets. S&P 500 up 11 points, the Dow up 182 points, and the NASDAQ up 42 points. Looking at the yields on the 10-year Treasury, off about 3 or 4 basis points here, 4.21% on your 10-year Treasury. The 2-year, 4.11. We'll have more coming up. This is
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. And with this Bloomberg Business Flash, stocks are heading higher right now. 7 of the 11 major industry groups in the S&P 500 are up, being led by information technology. Google shares, they are higher, up 6.5% after the earnings results yesterday beat estimates. Story of the morning is super microcomputer that is most active this morning, actually off the worst levels of the session, down right now 27%. The super microcomputer, the server maker, citing concerns about the company's governance and transparency. Their auditor, Ernst & Young, resigned. This according to a regulatory filing issued by Super Microcomputer this morning. Ernst & Young raising questions about the firm's commitment to integrity and ethics. A 2-year yield right now is 2 basis points higher. That's at 4.11. The 10-year, that is down 3 basis points. That is at 4.22. S&P 500, 11 points higher. That's up 0.2% at 58.44 on the index. The Dow Jones Industrial Average up 160 points. That's up 0.4%. The NASDAQ 100 is down 5 points. The NASDAQ Composite Index, that's 61 points higher after yesterday's record close. Right now up 0.3%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Jess and Paul.
All right, John Tucker, thank you so much. We appreciate that. Jess Menton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're also streaming live on YouTube as well. All right, folks, Bloomberg News experts are answering your questions on what the election means for your money, the economy, and businesses. Participate now by sending your questions to Bloomberg-QA@Bloomberg.net, and check out the discussion on T-Live Go on the terminal or at Bloomberg.com. Discussion begins at 10:30 a.m. Eastern Time, so check that out. Let's take a look at these the markets here. Again, as John was just reporting, a little bit of a lift to the markets here today, a little bit of green on the screen. Tiffany Wade does this stuff for a living. She's a senior portfolio manager at Columbia Threadneedle, joins us from NYC via Zoom. Tiffany, do you and your colleagues over at Columbia Threadneedle, have you kind of done anything to your portfolio with the election in mind, or are you trying to tune that out?
We're definitely paying very close attention to what's going on with the election odds. In general, for our portfolios, we've tried to take a very neutral approach to the election. And with the help of our research team, we've really tried to look at all of our holdings and what the potential impact of either a Republican or Democratic win would be on the portfolios, and as much as possible try to really have a sort of neutral, balanced approach in our portfolios. So I think that personally we're set up well for the election and should do well in either scenario. So for us specifically, we're not really seeing a need for repositioning for our portfolios, and we're not planning on doing anything necessarily drastic around the election outcome.
Tiffany, I wanted to pick your brain on the betting markets versus polls, especially because there's a lot of focus on Polymarket. Why would someone use them for a trading strategy over polls?
Yeah, I think you're seeing some, the market's definitely taking some bets on certain stocks or securities that would be Trump beneficiaries. Certainly the, equity market is a lot more liquid than the polling markets, which might be, a reason why you would want to take that bet within the equity markets. Also, you could, maybe juice up your bet through options, but we're definitely seeing some of the more obvious Trump win trades like Trump media stock or Bitcoin rallying very significantly over the last month.
Earnings. We're right smack in the middle of the earnings season. Tiffany, what have you seen and what do you expect to see, and what do you think the market maybe needs to see?
Yeah, earnings have been generally positive so far. We still have a number of the mega cap stocks yet to report, which could definitely have a significant influence on the tone of earnings season for the rest of the third quarter. We still have Meta, Microsoft, Apple, Amazon to report this evening, and of course, NVIDIA later this month, which is going to be very important. The tone, again, so far has been generally positive. For some of the big reports later this week, we saw Alphabet report last night.
which had a very strong result, especially in their cloud segments, both in terms of top line growth, but also margins. And that should be a positive read through for some of the big results from Microsoft and Amazon. But while earnings have been mostly good or better than expected for the third quarter, we are seeing companies in different parts of the market, specifically in consumer, some parts of industrials, and even some of the semiconductor companies, certainly outside of the ones that have a lot of AI exposure, continuing to give kind of cautious outlooks. So, we think that there's still quite a bit of uncertainty out there that's causing companies to maybe pause spending decisions. There's uncertainty around the upcoming election. There's uncertainty about the path of rate cuts from here. And there's also still some uncertainty about the path of economic growth from here. So we've seen the managements are being a bit more cautious in their planning and also in the outlooks that they're giving. Because, really, why would you put out numbers right now that are too lofty with so many things changing around you? But hopefully we will see activity pick up post the election and perhaps as interest rates continue to come down.
When you look at the S&P 500 year to date, up close to 23%. So the first 3 quarters of this year were the best since 1997. So as we are in the final stretch here of the year, how are you advising your clients to position here? What are you saying they should add maybe exposure to? What should they buy? What do you think they should sell on the equity side?
Yeah, we're continuing to stay long within equities. We think the rest of the year is going to be pretty positive. The first thing to point out is that generally after elections, the remainder of the year tends to be very positive as the uncertainty from the election results lift. In general, as I mentioned, we're seeing positive earnings results. Growth is still quite strong across the economy. It slowed from earlier this year or a year ago, but is still quite positive. And we're also seeing consumer spending continue to be quite strong. So there's a lot of things that you can point to that would continue to suggest that equities should do well into the end of the year. In terms of, where we're pointing to, positive and things that we like in the market, AI still continues to be a really great theme. We're strongly invested in the theme. Part of it is that there's just a ton of visibility for the next couple of years into spending trends around AI. And certainly that's benefited semiconductor companies like NVIDIA, which we still, think should be quite positive, but also, impacting companies that are involved in the AI infrastructure value chain. And we think that's another very interesting area of investment that has, probably 3 to 4, if not longer, year tailwind of visible spending coming.
All right, Tiffany Wade, thank you so much. We appreciate that. Tiffany Wade, she's a senior portfolio manager at Columbia Threadneedle Investments. They got about $670 billion in assets under management. So they get some pretty good exposure. Tiffany focuses and her team on kind of the large cap U.S. growth names, which that's the place to be. I mean, it's tough trying to be a small cap manager, but large cap growth, I'm just buying that big tech names and that's it. Flipping coupons.
I mean, especially when you look at the underperformance of small caps once again this year relative to large.
We had some of the big European banks started reporting. UBS came out with some better than expected numbers, but management, I think, they're saying, hey, there's some risks out there. So kind of tempering the outlook a little bit. So let's break it down with Allison Williams. She is the senior banks analyst for Bloomberg Intelligence. So Allison, I mean, of the big European banks, UBS is the one I think a lot of people focus on because they have such a big presence here in the U.S. What did you see coming out of UBS and kind of what's their outlook?
So a really strong quarter. Fundamentals look good. I think there are some concerns about capital, and that might be weighing on the shares today. But, to your point, people look at their business, 60% growth in their Americas trading business. So wow is the word. Yeah. It was a record third quarter trading for them. Keep in mind that third quarter tends to be weak. So, but it was the strongest third quarter they've ever had, and that was really due to cash equities and derivatives strengths of the bank. So 27% growth, really looking good, and a lot of momentum coming into the fourth quarter. The other positive for UBS, that core wealth franchise is really what sets them apart, and they did have very strong inflows across all the regions, especially Asia. So that's also very good. And then on the deal execution side, we also like what we're seeing there in terms of the cost progress. The gross cost saves are over 50% the way there. So that's a positive. The non-core unit, so that's, stuff they want to get rid of. They're making cuts there faster than expected. But capital, as I said, that was the one thing I think, investors are still a little bit skittish on. They did actually take a cut to their capital ratio in the quarter, basically because they voluntarily are kind of giving up some accounting relief. So, I think that's accounting is sort of just noise in my view. But they did say that, they're not sure if when they report the fourth quarter in February, if they're going to be able to give guidance on buybacks. And that's because, while they're executing on this deal fundamentally, regulators, are concerned about the size and they may force them to hold more capital.
Looking over at UBS's stock right now, down about 3.6% on pace for its worst day since August 2nd. Of course, you were talking about, obviously, capital, but there was also a lack of any further guidance from executives on that analyst call as well. So how much is that also weighing on the stock at this point, Allison?
Well, I think it really is the lack of guidance on capital, to your point, that is weighing because, if they restarted their buyback, in the first half, but people are very focused on the prospects for capital return. And I think the fact that, not only did they not give guidance, but they said they might not be able to give guidance in February is the concern.
So how representative is UBS of kind of some of the other European banks, Allison?
So it's interesting that, UBS versus the other bank, they are more skewed to the equities business. They do have a very strong U.S. presence, as you said. They also tend to be strong in Asia, and we really saw a lot of strength there late quarter that benefited, the companies such as J.P. Morgan and Morgan Stanley. So Deutsche Bank does not have the equities business, but they were very strong in FICC. And we'll see what happens with, BNP and SocGen are the next ones to come. So they might not get that same lift that UBS saw from their kind of unique footprint. But generally, we did hear about strength across regions, across cash and derivatives is a strength for those two French banks. And so we think that we could see some strength there tomorrow.
All right, Allison, thank you so much for joining us. As always, Allison Williams, she's a senior banks analyst for Bloomberg Intelligence globally. Full disclosure, I am a client of UBS, so shout out to Tony O.C. and the boys. Looking at the stock, it is down 3.8% today, as you mentioned, Jess, but it did actually open up higher this morning and hit a 52-week high, but trading off since there. And it's up about 30% over the trailing 12 months. So, maybe kind of seeing the bottom there and that integration of the Credit Suisse.
That's right. I was going to bring that up. That happened on July 1st. So kind of looking at how those, obviously that was more than a year after the emergency takeover was announced.
Exactly. My former shop there, Credit Suisse. UBS saved us, I guess, at the end of the day. S&P 500 up 12 points. The Dow up 160. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. It is the most active stock, Supermicro Computer, and it's down close to 29%. Ernst & Young resigned as the auditor to the troubled server maker, citing concerns about the company's governance and transparency. Again, right now, it is down 29%. A communication service, best performing industry group in the S&P 500 right now. And, of course, that is home to Google's parent, Alphabet. They're showing an expensive foray into AI is paying off. They delivered, after the close yesterday, better than expected sales for its cloud computing business. They drove more usage of its flagship search engine. Revenue, when you strip out partner payouts, that it jumped 16% over at Alphabet. Eli Lilly lowering its full-year guidance on lackluster sales of its blockbuster weight loss drug. After raising guidance twice this year, Lilly now expects full-year sales to top out at $46 billion, cutting about $600 million off the prior upper end of its outlook. And Lilly shares right now, they're down about 8.6%. And some news on BYD. This is the Chinese EV maker notching up another win over Tesla, reporting quarterly revenue that beat Elon Musk's car maker for the first time since the pair have gone head-to-head in global electric vehicle sales. Right now, the S&P 500, 11 points higher. That's up 0.2%. We're at 5844, the index. The Dow Jones Industrial Average up 151 points. That is a rise of 0.4%. And right now, the NASDAQ 100 is 3 points lower. Two-year yield up 4 basis points. That's at 413. The 10-year yield right now down a basis point, and that is at 424. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Jess and Paul.
All right, John Tucker, thank you so much. We appreciate that. Jess Minton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're also streaming live on YouTube as well. Speaking of YouTube, what would you like to hear more on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg audience survey. Visit youtube.com/Bloomberg Podcast and click the link in our portfolio, our profile, or community section to take the survey, which is hosted by our partners over at Material. Fill it out now at youtube.com/Bloomberg Podcast. Coming up in just moments, we're going to do a Democratic Senator Tammy Baldwin of Wisconsin is going to speak with Bloomberg Television anchor David Gurr from Green Bay, Wisconsin. David's out there for the election. He's also going to be in Pennsylvania.
He's been busy.
Again, he's been busy. A couple battleground states there, so we'll get some reporting from the ground here. So it's going to be, obviously, as we've heard, a very tight election. And
less than a week to go.
Less than a week to go. We may not know for several days or even more after who actually is the winner. So right now we're going to head out to Green Bay, Wisconsin. Democratic Senator Tammy Baldwin of Wisconsin speaking with Bloomberg Television anchor David Gurr from Wisconsin. Let's take a listen.
TV Worldwide, I'm here with Senator Tammy Baldwin of Wisconsin. We were in Green Bay, Wisconsin. You call this state the battleground state. Yes, you are not hedging on this. You say your race is 50-50. The presidential race here is 50-50. One of the reasons I wanted to come here was see if the polling sort of is meted out on the ground. How close is it, and what's your path to victory as you see it?
Yeah, so we've been a battleground state for some years now. If you think of 2016, Donald Trump won the state by 0.7%. And it was the tipping point state for him to win the presidency. But 4 years later, Joe Biden won Wisconsin by 0.6%. That's like 1 or 2 votes per precinct in our state. And this looks like it's going that same path. So now everything comes down to turnout. Which side really gets their voters out, does the hard work for those who are still undecided, there's a handful still, and helps them get to the polls and reminds them that their vote is their power.
I should say we're sitting on your campaign bus and you're on this multi-day bus. On you, you acknowledge that the balance of the Senate sort of hangs on this seat. How do you navigate that, and does it push you maybe more moderate as a result as you kind of think of just the role or the importance of this seat to Democrats?
You know, I think really the choices here are really between somebody, myself, who's been fighting for the working people of this state, and a candidate who is much more interested in multimillionaires and big corporations. And that couldn't be on clearer display when you look at the fact that he supports a $4 trillion tax cut that would disproportionately impact and benefit multimillionaires like himself and big corporations, whereas I'm trying to get working people tax cuts, the child tax credit, the deduction for those who are starting up a business, deductions to make home ownership more available to first-time home buyers. Those are the things that I want to see through. But that contrast couldn't be on sharper display between myself and Eric Hovde. And then, how would he pay for that $4 trillion tax cut? He proposes a plan that would reset federal spending to levels from the last decade. And if we did that, it would mean cuts to Social Security, about $6,000 a year for the average beneficiary. I mean, we couldn't be more different on the economy and fighting for working people. I think Wisconsinites want somebody who's working every day for them.
On the economy, we look at our poll, the Bloomberg Morning Consult poll, we look at other polls. The economy is the #1 issue in each and every one of them. Is that true as you talk to voters here in this state? Is that the thing that they want to hear about from you, that they indeed care the most about?
It is certainly top of mind for voters who haven't seen any relief from the inflationary prices that were caused by the pandemic and the screwed up supply chains. Those supply chains have been addressed, but the corporations haven't at the grocery store every week, or while inflation has gone up over 3 years by 14%, corporate profits at that same time have gone up 75%. My voters who are really squeezed by these prices want a cop on the beat helping them. And so I support legislation that would empower the Federal Trade Commission to go after corporate price gouging, investigate it, try to have a champion for consumers on the job.
We were in Sheboygan yesterday, and after you gave your speech, I talked to somebody who's supporting you, and I said, tell me about this place, and he began to point out places where there were companies who had been there or had reduced their footprints, and Kohler is chief among them. And he sort of wondered what would bring them back. This is sort of stock and trade rhetoric for your opponent, for former President Trump as well. He's telling voters that these companies will come back. Are there mechanisms by which you can do that, or is it time for voters to sort of recalibrate their expectations for what a manufacturing renaissance would look like in this country?
Yeah. So first, Kohler is still an iconic business, yes. Very close by to Sheboygan. They have, I believe, sold one of their divisions, but they're still making sinks, faucets, shower heads right in that area of the state, and they have a very strong workforce. But I want to answer your question, because I consider myself one of the Buy America champion of the United States Senate. So when we're passing big pieces of legislation, I'm like, we got to make sure there's Buy America rules attached to this. And I was successful in getting permanent Buy America rules attached to the infrastructure bill, to the Chips and Science Act, to the Inflation Reduction Act. That is bringing jobs back to Wisconsin right now and keeping some jobs here that might otherwise have left. Give you an example. In Kenosha County, there's a company called Sanmina that makes circuitry type of things. We needed a specific type of circuitry for our broadband build-out. The infrastructure bill pledges to get every residence and every business hooked up to high-speed internet. And so our Commerce Secretary, because of the Buy America rules, was able to go overseas, engage a CEO of a company and say, I need your product. And he said, go ahead and buy it. Well, there's this problem. Buy America rules. It means that you have to produce them in the U.S. Well, they found a compatible company, Sanmina in Kenosha. 200 new jobs right now being created because of Buy America rules. I think that's one very powerful tool to bring jobs back and to actually get a leadership role in some industries that we have previously given up and given away to other countries.
I want to ask you about health care, which of course complements the economy. You've talked a lot about the Dobbs decision. Mike Johnson, the Speaker of the House, promised massive reforms to Obamacare at a speech earlier this week. How critical is that an issue for you? How much is that resonating with voters, sort of the viability of the Affordable Care Act of Obamacare?
Yeah, my opponent, Eric Hovde, has said he wants to repeal it in its entirety. I helped write it when I was in the House of Representatives. The achievement of getting health insurance companies to cover people with pre-existing conditions was life-altering for millions of Americans. Millions of Americans have insurance today because the companies can no longer say no and cherry-pick their customers, right? And I wrote the provision that allows young people to stay on their parents' health insurance till they turn 26. That's another game changer for folks right out of high school whose first job probably isn't going to offer full health insurance. And so we have to strengthen and build upon the Affordable Care Act, but we cannot go through another period of time where Republicans are threatening to repeal it and people are feeling the lack of certainty about their future, their ability to have the basic security that health insurance provides.
We have 1 minute left. Vice President Harris delivered a big speech yesterday, her closing argument, and she acknowledged the fact that there are still voters who don't know her, who feel like they don't know her, what she stands for. Could you just give us some anecdote, some sense of who she is that might help those voters understand how she operates, what she's like as somebody who worked with her so closely in the Senate and now is with her as vice president?
Yeah, well, I just looked at her resume. She was the top prosecutor for the largest state in the country and held perpetrators to account. She, on the Judiciary Committee, was masterful at holding power to account. I think that that's one thing that you need to know about Kamala Harris, is that's been her history. And I think she's going to be a really, really strong president.
On the bus with Senator Tammy Baldwin in Green Bay, Wisconsin. Back to you.
All right, that's David Gurr, Bloomberg Television's anchor David Gurr, with Democratic Senator Tammy Baldwin of Wisconsin from Green Bay, Wisconsin, on the bus there, giving us the latest of a tight race there in Wisconsin, reflecting at the senatorial level as well as the presidential level. So we appreciate getting some on-the-ground reporting from David Gurr. I believe he's be heading over to Pennsylvania soon as well, another battleground state. Let's stick with the topic of politics. Why not? Because we got the election coming up on Tuesday. Here's an interesting headline in the Bloomberg Terminal: how Puerto Rico became an issue in the U.S. election. Laura Davison joins us. She's a political editor for Bloomberg News. She's down in D.C. So, Laura, we've heard a lot about Puerto Rico in this election just in the last week or so. Can you explain to us kind of what's going on, why it may be important?
Yeah, so this really kicked off over the weekend at Trump's rally at Madison Square Garden, where a comedian who was one of the kind of preview speakers before Trump came onto the stage made a joke about Puerto Rico, where he called it a floating island of garbage. And that has really picked up a lot of traction. You know, it was sort of in the mix of a bunch of other incendiary and racist comments at this rally, but also because Puerto Ricans are a particularly important voting bloc, especially in Pennsylvania. And sort of, you know, not that directly connected to this, but it also has been a group that both Trump and Harris have had outreach to in recent days. The day that remark was made, Harris was at a Puerto Rican restaurant in Pennsylvania. Trump just last night was in Allentown, Pennsylvania, which has a large Latino population, and Pennsylvania as a whole has one of the largest Puerto Rican populations in the country. So this was quickly denounced by several people, Puerto Ricans, but also, Republicans that represent Florida. Senator Rick Scott, for example. Even the Trump campaign came out and said, look, we didn't approve this. We don't, support this. Doesn't represent our views, which is not something you see a lot from the Trump campaign.
I wanted to get your thoughts on the latest headlines that we had in the past hour about the Supreme Court allowing Virginia to purge voters before the election. Walk us through what we know so far on this, and what's the precedence for something like this?
Yeah, so at issue are about 1,600 voters on the Virginia rolls, which the state has asked to purge. They say, look, we think that these are not citizens on here, and we want to remove them. There are laws in place about, how close to an election you can get rid of some of these. You can change the voter rolls. So they petitioned the Supreme Court. The Supreme Court today said, yes, you can go ahead and remove these people from the voter rolls. This is not, Virginia is not expected to be a swing state here or be decisive in the election. 1,600 is a relatively small number, but this has a lot of election security people worried that this could foretell some larger purge in a state that could potentially be decisive in either the presidential race or any of the contested Senate races.
Yeah, I have to admit, I can't recall seeing a story like this where this has actually occurred. Does this happen with any regularity across the country, or is this case in Virginia particularly unique?
This is sort of a unique thing we're seeing. This is something that, has come up in several states. Both, we've seen in Nebraska, for example, they wanted to change their rules about how they apportion their electoral college votes. You've seen some other states having some issues about this, but generally, either for political reasons or for legal reasons, that states have said, no, we can't change things as close to elections. So this was a little bit of a surprise this morning from the Supreme Court.
So when you look at the kind of latest headlines coming through the terminal, Virginia canceled registrations of estimated 1,600 residents here. Of course, Donald Trump and Kamala Harris will crisscross several string states today, passing each other, of course, in Wisconsin. When we have less than a week to go ahead of Election Day, what do you think is most crucial here when they're pushing through what their potential policy proposals are?
Yeah, so what they're doing now is they have generally put out all the policy proposals they have. That you still have seen Trump start to outline some additional ones as he's been sort of grasping for additional votes. But they're really framing and honing in on their argument, why voters should vote for them. So we saw last night with Harris on the ellipse, she was making an argument about Trump being a danger, but you also saw her quickly pivot to talk about sort of her prescriptive view, particularly for the economy. We know that has been one of the key issues for voters, really the top issue in this election. You've seen Trump really double down on immigration. Polls show that this is, perhaps probably the number 2 issue in this race. But even more so than talking about the economy, he's really been doubling down on immigration, the threat of migrants, and that's sort of why this Puerto Rican comment from over the weekend has really caught fire.
Down in Washington, D.C., Laura, what's the feeling about some of the down ballot races that are key to the control of both the House and the Senate?
Yeah, so there really is a key overlap between some of these key Senate races as well as sort of the battleground states. So, we're looking at places like Pennsylvania and Michigan and Arizona. Democrats are at a disadvantage when it comes to the Senate. They are defending a bunch of seats, in places like Ohio and Montana that Trump has won and are expected to win in next week. The House is a little bit more of a wild card, and because those races aren't really overlapping with the Electoral College map, it's really New York areas, particularly the New York City suburbs, as well as California, sort of the Southern California suburbs around San Diego and Los Angeles that will be decisive there. So that's a really close race. It's really anyone's guess as to which way the House flips. The Senate, Republicans have an advantage, but things could all break in Democrats' way if they hit every race just right.
Of course, there's a lot of discussion that we potentially might not even know the results of the election that evening, kind of similar to what we would have seen in 2020. We didn't get the final results till that following weekend on that Saturday. What's kind of when your conversations with your sources are they saying as far as what the timetable could be, potentially of when we would know the eventual results here?
Yeah, it's looking like we will not have results on election night. It is possible, but a relatively remote possibility. There are several states, including Pennsylvania, that will likely end up being decisive, that take a little bit longer than average to vote. Each state has different rules about when they can start voting, particularly when they can start mail-in ballots, when they can start tabulating early votes, and sort of all the different things they need to do to come to an official total. So that really varies state by state. And of course, we also anticipate that there might be legal challenges that could either pause the counting or stop the counting, or take time for things to work through the courts. So it's very likely that this will be days, if potentially weeks, if there are several hurdles in key states, and it looks to be really tight margins.
All right, Laura, thank you so much for joining us. Laura Davison, she's a political editor for Bloomberg News, joining us from Washington, D.C. So, again, I think that's going to be really interesting, Jessica, and probably very frustrating for a lot of people who want to go to bed on election night like we used to, knowing kind of who the president is going to be, but it could be...
Right, could take days again.
Yeah, and maybe perhaps even longer, and I don't know. I guess that simply just reflects the fact that the electorate is so evenly divided that literally every vote counts. Mm-hmm. You can't be there at 8 o'clock p.m. and call the race,
right.
I guess a network.
A few minutes ago, we asked the live audience on X to submit a few requests for what they would like us to try out here. So I will take a couple of prompts. Okay. Bot Gaskar wants to know if GPT-4o is capable of real-time translation. Mark, you want to try this one?
Sure. Yeah, let's do it.
All right.
Yeah.
I speak Italian, so we can just do English Italian.
Let's try to do English Italian. Sure, let's do it. Hey, ChatGPT, how are you?
I'm doing fantastic. Thanks for asking. How about you? How's your day going?
I'm doing great. So I would like you to function as a translator. I have a friend here who only speaks Italian, and I only speak English. And every time you hear English, I want you to translate it to Italian. And if you hear Italian, I want you to translate it back to English. Is that good?
Perfetto.
Mark, io mi chiedo se le balene potessero parlare, cosa ci direbbero?
Mike, she wonders if whales could talk, what would they tell us?
They might ask, how do we solve linear equations?
Potrebbero chiederci come risolviamo le equazioni lineari.
Sicuramente sì.
Certainly yes.
Great. Looks like it works.
All right. So the next one is from Burrito John 78, who asks, can you tell what you're feeling just by looking at your face? Barrett, you want to give this one a try?
Absolutely. Let's try it out. Hey, ChatGPT.
Hey there. What's up? How can I brighten your day today?
Okay, yeah, so I'm going to show you a selfie of what I look like, and then I'd like you to try to see what emotions I'm feeling based on how I'm looking.
Sounds like a fun challenge. Go ahead and show me that selfie, and I'll put my emotional detective hat on.
Okay, so here's me. So what kind of emotions do you think I'm feeling?
It seems like I'm looking at a picture of a wooden surface.
Oh, you know what? That was the thing I sent you before. Don't worry, I'm not actually a table. Okay, so take another look.
That makes more sense. There we go. It looks like you're feeling pretty happy and cheerful, with a big smile and maybe even a touch of excitement. Whatever's going on, it seems like you're in a great mood. Care to share the source of those good vibes?
Yeah, no, the reason I'm in a really good mood is because we were doing a presentation showcasing how useful and amazing you are.
Oh, stop it. You're making me blush.
Amazing. Well, that's it for today on live demos. As you can see, this just feels so magical, and that's wonderful. But we also want to remove some of the mysticism from the technology and bring it to you so you can try it for yourself. So over the next few weeks, we'll be rolling out these capabilities to everyone. Today has been very much focused on the free users and the new modalities and new products, but we also care a lot about the next frontier. So soon we'll be updating you on our progress towards the next big thing. And before we wrap up, I just want to thank the incredible OpenAI team, and also thanks to Jensen and the NVIDIA team for bringing us the most advanced GPUs to make this demo possible today. And thank you all very, very much for being a part of this today.
I'll make it. I'm John Tucker. Bloomberg
You're almost
Business
there.
Flash. Almost. Not close enough. Jess and Paul.
Yeah. Grizzled veteran, John. We appreciate that so much, John Tucker. Jess Menton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube, so head over to youtube.com, search Bloomberg Live Radio, search Bloomberg Podcast, click on the white thing. That's to kind of get you to the live programming. It all works, trust me. As John was just reporting, a little bit of green on the screen here. Let's check on some individual names. It is a big earnings week. A lot of stocks moving. Alexandra Semenova joins us. She covers all the equity markets for Bloomberg News. She joins us here in our studio. Alex, what are you looking at?
Great to be here with you guys as always. I know that you guys will dive deeper into Eli Lilly's earnings later in the show, but we got to talk about the stock move down 5% right now. At some point today, it was down as much as 15%, which was the worst intraday move since August 2000. So obviously taking it on the chin, Paul, as you said, after they missed on sales of their blockbuster weight loss drug. Obviously a surprise to investors given the popularity of the drug and how much it's driven sales for Zepbound and Mounjaro. They missed estimates by nearly $900 million. And this kind of speaks to the momentum of these trends, whether it be GLP-1 drugs or AI. As soon as there is any kind of disappointment in earnings, investors will really punish those names.
Walk us through what's happening with burrito maker Chipotle, because this was actually the first report since actually Brian Niccol, their former CEO, actually left the chain to actually lead Starbucks turnaround. And also there was a high bar because there's been a streak where Chipotle has, especially with its other cash casual kind of restaurants, where it had outperformed a lot of them.
Yeah, right. Great point, Jess. I mean, Chipotle has been on a tear. This is another example of a stock where the bar was really high coming to the report. Shares right now are down about 7%. This is the worst day since about August. Earlier in the day, they had the worst intraday move since last year. And this is after missing the same-store sales, a disappointment there. But again, the miss was very narrow here, just because the expectations were so high going to the report.
Are you a Chipotle customer?
I'm not. I haven't been in a while.
I haven't gone in a while either.
There's one on 3rd Avenue.
Okay.
That's where I go to.
That's
my go-to.
It's your go-to.
What do you get, Paul?
Yeah, what do you
Two beef tacos.
Ooh, okay.
Yeah. Now, I used to get 3. But what happened is, remember when YouTube, there's something going on the social media that they were underserving you, like with the beef and the cheese and all that kind of skimping.
Shrinkflation.
And so, exactly. And so I think in response to that, the word went out to all the people, overfill all this stuff. So now they just put in tons of stuff. So I only need 2 instead of 3.
I see. See, I'm from South Texas, so I'm used to Tex-Mex, and it's hard for me to. Right,
it's like
right,
pizza.
right. So I end up a little bit disappointed sometimes because it's because I was spoiled down there.
I know, but it's good. I mean, Mike Hayden will tell you that's one of the best performing restaurant companies.
I was actually thinking of my first encounter with Chipotle. This was about 10 years ago on Halloween. They used to make you dress up as a burrito and give away free burritos.
Oh, I love
when they first started out. So they give you. They give you a foil wrap and you gotta dress up.
Well, that's we have tomorrow, just in time.
Just
we can all go.
Paul,
maybe tomorrow when you get that beef burrito.
Free burrito. AMD. What's going on with their tech buddies?
That is another ugly one. Shares are sliding right now, down about 10% after the chip maker missed on its revenue outlook. This is, of course, signaling signs that artificial intelligence sales are growing slower than some had anticipated. Kind of the same theme as Eli Lilly. It's all about GLP-1 drugs, all about AI, and if investors see that these companies aren't delivering on their lofty promises on these trends, then they're going to be really disappointed, and we're seeing that in the reactions here.
You know, there was one more stock I wanted to point out. It's actually the best performer in the S&P 500 today. It's actually Garmin. It's a navigation device maker.
People still use that?
Right, apparently so. So its outlook was raised ahead of, obviously, the sailing season. So you're actually seeing that up, actually about 23% on pace for its best day since August 2009. So some people were kind of sleeping on like that one this morning because there's so many other companies that have been coming out. And of course, have the big tech earnings. So, but this one kind of got overshadowed by a lot. But don't forget about Garmin.
Don't we all just use Google Maps now?
Yeah,
I don't even use what's.
I remember the Garmin
use
on
what's
my
in my car anymore. I don't even use
the dashboard, but that was like 20 years ago.
I mean, that stock's up 60% year to date.
Go figure.
Yeah.
All right.
Don't
That's
sleep on
another name I don't own. Alex Semenova, thank you so much for joining us. Alex Semenova. She covers all the equities for Bloomberg News. We appreciate getting a few minutes of her time on this day. We've got the indexes up slightly. Again, looking at that Eli Lilly story, the stock's down 5%, so it's well off its intraday lows. It was off about 11 or 12% earlier. But guess what? It's up 47% year to date. So this one's had a nice run. It's got an $800 billion market cap, but clearly a little bit of a miss here today. Let's break it down with somebody who knows Eli Lilly better than anybody out there. That's Sam Fazeli, Director of Research for Global Industries and a Senior Pharmaceuticals Analyst, the go-to voice in the city of London. If you want to talk about this healthcare stuff, and if you want to talk wine, he's also probably better adept at that. So, Sam, Eli Lilly, I know you know this company really well. What did they disclose today in the results, and why is the stock selling off?
Yeah, so hi, Paul. Nice to see you all again. I'm looking at the screen. You know, as you guys said earlier, it had been down like 13.5%, 14%, 15%, and now it's kind of coming back. The call is just finished, the Q3 call, and I'll just break it down quickly for you. When they reported, we got a miss, right? And I'm looking at it right now. They missed by 6% on revenue. That is not what you do when you're a 60 PE company, right? The world's not forgiving enough on that. And by the way, those burritos you're talking about, 785 calories for an average burrito.
Wow.
So if you want to help Eli Lilly, you have 3 of those a day. Yeah.
Right.
No. So just breaking that down further, the miss was 2 drugs, Mounjaro and Zepbound, and those are the drugs that everybody talks about. This is the obesity drugs that are on the market. They missed. Why did they miss? The company said that it's because there was an inventory destocking going on at some wholesalers. So people go, wait a minute. You're saying to me that demand cannot be satisfied, we're supply limited. So why is there an inventory issue in the middle here? And of course, that's what led to the question of, oh my God, are we overestimating demand here? Is the company overestimating demand? Is the world overestimating demand? So why have we come back from 5%? Simple answer. It sounds like with the 12 different forms of the drug that they have, that no one in this early launch phase, we can call it early launch, right, given that it's been a couple of years, is really able to manage and work out what they need to have as inventory, because in such a massive product, you're going to have an impact on working capital, even for the wholesalers. It sounds like that's the issue, that even Lilly themselves can't necessarily forecast here, right? I mean, the actual details of how much of each product they have to make. If that's true, then, and I think you get a little whiff of that in the fact that full year guidance wasn't dropped by as much as the miss, that at least currently they are optimistic about picking a whole bunch of that back up in the Q4, that we should not worry about demand. You talk to any doctor you want. Do they say, oh, I have no patients left to asking me for Zepbound or Wegovy or whatever? So I think that's what's happening here. The difficulty in managing and thinking about how to manage your inventory.
Something I wanted to pick your brain about was when it comes to knockoffs, because we saw a huge drop in Hims and Hers earlier this month. So they previously were allowed to manufacture copycat drugs when they're deemed in short supply by the FDA. But the FDA at that time said when it came to Zepbound and Mounjaro, specifically for Eli Lilly, they weren't shortage anymore. So that's why you saw that drop there. But they still, when it came to Ozempic and Wegovy, when you think about Novo Nordisk, they were still able to offer compounded versions of those. So I'm wondering, when you think about Eli Lilly versus what's happening with Novo Nordisk, how does that kind of come into play when you're thinking about when it comes to sort of the knockoffs and the copycat type drugs?
Yeah, sure. I mean, I'm not even sure that people have stopped making compounded versions of Zepbound and Mounjaro, because the FDA kind of reeled back a little bit and said, oh, we're going to actually look at this again. So I don't think that story is finished. I think that some folks are still able to supply those from a compounded pharmacy perspective. So, that's a law, that's a route that the FDA does provide to people. If there's a shortage of a drug and someone else can make it, well, let them do it. The interesting angle, of course, is that a whole bunch of people who are taking off the compounded pharmacists are probably paying less, and therefore, if they're forced to go and take it from a prescription, they may have to pay more out of pocket. So that's not going to be leaving a particularly good taste in folks' mouths once that this actually happens. But it hasn't happened yet. So, and they did say on the call that this is not because there's enormous demand being fulfilled by compounded pharmacies. It's literally to do with that inventory management issue.
What are the companies saying, Sam, about getting this in an oral format? I think that might be one of the next big, I guess, mileposts for this type of treatment.
Yeah, I remember, Paul, there's already an oral form of this. It's called Rybelsus. It's from Novo Nordisk. It's just a tough drug to use because you have to have it within about half an hour of eating. You can't take it too close or too far from an eating because you need an empty stomach before you take the drug. And it's a big dose, and maybe the side effect profile isn't as great, and the weight loss isn't as great. So people are trying to develop oral versions of these drugs, but also oral drugs that are like normal drugs, small molecules that they can swallow as a pill once a day. So that's coming.
So what do you think shareholders need to watch for next when it comes to, especially after its outlook disappointed?
I think we need to see how Q4 does. So let's hope that their current guidance, at least they meet it, maybe beat it. That would be nice. The issue is then we move into Q4. There's an interesting result from a clinical trial that's coming up. They've done this before. They're comparing Zepbound with Wegovy. And I suspect that they're hoping, and that data suggests that they will show that it has better weight loss. Whether the side effect profile will be better or different, time will tell. But not many pharma companies do these type of head-to-head trials, because that takes some.
Yeah, no, I just wanted to get real quick. What's the latest thinking on the size of this market? I know you guys have done a lot of work on this.
Oh, yeah, I think Mikey's latest numbers are at 93 billion.
Wow.
I don't remember exactly. Okay. It's big.
Yeah.
Well, out of nothing, exactly. So,
Right. Oh, before you
but
go,
then
before you
2025,
go,
we have a whole load of data coming. Yes.
is there any significant evidence that red wine is healthy for you?
Oh, I'm not going to go there because I'm a health drug analyst, not a red wine analyst. I just know that I enjoy a glass or two. You gotta have to remember it's also bad for you. Causes cancer, all sorts
No,
of
it's
things.
not. It's fine.
Oh,
It's
please.
fine. And he lives in Bordeaux.
We have to be fit. A whole bunch of people listen to this. This is not about a bottle of wine a day, maybe a glass. But even then, I think the medical professional says be careful. But I choose to take that risk, and I do love a good
You're so
glass
brave.
of wine.
Sam Fazeli, thank you so much for that. Sam Fazeli is the Director of Research. He also covers the pharmaceutical industry for Bloomberg Intelligence over in London. Just, again, one of the big pieces of news that broke just a little while ago, coming out of the U.S. Supreme Court, allowing Virginia to purge an estimated 1,600 residents from its voter rolls. That's despite a lower court ruling. So, again, kind of a interesting kind of play there. June Grasso joins us, our legal analyst here at Bloomberg. June, what does this mean to you? Let's put it that way.
Well, to me, it means that it's a 6-3 decision, so that says a lot.
Okay.
And it feeds into the Republican narrative that there are so many non-citizens voting. So to me, it means that the Supreme Court is willing to get involved in the election, even at this point. I thought that they would just turn this away. Virginia, the governor, 90 days before the election, issued this order about cleaning up the voter rolls of non-citizens. And the Federal Registration Act, the National Voter Registration Act, prohibits doing anything systematic to the rolls within 90 days. So this was the lower court and a 3-judge panel rejected this, and then the Supreme Court allowed it to go forward. And Virginia, part of the argument of the federal government is that you don't know who these people are that you're taking off. Maybe they didn't check the box on their driver's license or their voter registration, I'm a citizen, or maybe they were a non-citizen at the time and now they've been naturalized. They're not doing the checks that are necessary. And Virginia admitted that there could be mistakes, and there have been found. There is a lifelong Virginian who found that she was not, all of a sudden she wasn't registered to vote. So the process has a lot of flaws to it. And the Supreme Court, it also happened in Alabama, but they decided not to appeal. So the Supreme Court in a 6-3 vote, and we don't know what reasoning they accepted, because Virginia also argued that the Voter Registration Act doesn't apply to non-citizens, so they were free to do this. There are a lot of questions with this.
All right, June, thank you so much for that. Appreciate it. This is a developing story. We'll have more reporting on this throughout the day. The Supreme Court lets Virginia purge voter rolls for the election. June Grasso, our legal analyst for Bloomberg Media, joining us here in our studio, giving us the breakdown here, so we'll stay on top of that. Markets, kind of not much going on there. The S&P's up 3 points, the Dow's up 140 points. The Nasdaq's absolutely unchanged on the day. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages a little changed right now to higher. S&P 500 4 points up, 58.37 on the index. The Dow Jones Industrial Average is up 130 points. That's a rise of 0.3%. The NASDAQ Composite Index adding to its gains. Yeah, remember, it was a record close yesterday. Right now, up 14 points at 18,727. Worst performing stock in the S&P 500. This belongs to Super Micro Computer. Those shares, they are down over 30%. Ernst & Young resigned as the auditor to the server maker. They cite concerns about the company's governance and transparency. Ernst & Young raising questions about the firm's commitment to integrity and ethics. Alphabet shares, here's the update on Google. Up 5.5% right now after Google parent reported third quarter results that beat expectations. Of course, they reported after the close yesterday. Microsoft and Meta, they are in the batter's box. They report after the close of regular trading today. I haven't done Reddit shares. They were surging. The company's results and forecasts beating analyst expectations, marking its biggest intraday rally since the day after its IPO. Oh, I keep looking for excuses to drink red wine. Sam didn't give me it. He was such a downer. Anyway, this is from the Journal. Scientists are closing in on ways to help patients grow new heart muscle after a heart attack, as well as new lung tissue to treat fibrosis, corneas to erase eye pain, and other body parts to gain a new chance at life. So, I mean, to me, that signals... Yeah, go ahead, John.
Go ahead, John.
Well, I was going to bring up, remember there was a guest that brought some wine once, and I remember John Tucker was like, snooze, you lose, and he got the bottle before I could get it.
Yeah, that was Neil.
He was left in the dust.
No,
I
you're
never,
saying it
never
like I
forget.
stole it.
He was here yesterday.
No,
No wine.
he was actually back yesterday, but I don't think he brought a bottle of wine that time.
no wine.
He didn't.
Very disappointed.
No, but he offered it, and
very kind. Bring
Tucker jumped on the opportunity.
He has his own vineyard.
He does. Yeah, up in
Amazing.
Westchester.
That's
up in that
my
area.
kind of guess.
Exactly. John Tucker, thank you so much. We appreciate it. Jess Menton sitting in for Alex Steele. I'm Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Speaking of YouTube, what would you like to hear on a Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg Audience Survey. Head over to YouTube.com and go to youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the survey, which is hosted by our partners over at Material. Fill it out at youtube.com/Bloomberg Podcast. We've got earnings coming in generally pretty solid. We've got a Fed that's cutting rates. That seems like a decent backdrop for risk assets.
Also, NASDAQ 100, I know John Tucker brought up the NASDAQ Composite earlier, but the NASDAQ 100 is also nearing a record. It's only about 0.8% away from that July 10th record, so ahead of results, obviously, after the bell when it comes to Meta as well as Microsoft. We'll see if it could push it over the line.
Exactly. Some big numbers there. Let's check in with somebody who does this stuff for a living. Kathy Entwistle, Managing Director, Morgan Stanley Private Wealth Management, joining us via the Zoom thing. Kathy, what are you telling your clients here? We've got equity indices at or near all-time highs, seemingly on a daily basis. We've got decent yields in the bond market. You can get more than 4% sitting in a 2-year Treasury yield. What's the message to your clients these days?
Yeah, the message is a little bit of patience and a little bit of pickiness. Like, we want to think about what we're owning and what we're buying in these markets. There are, as you are seeing this week with earnings, companies that are reporting below estimates are getting slammed, and companies that are meeting or exceeding are getting the benefits of in their prices. So we're just saying, like, this is a stock selection market. This is not a buy, the index market per se, and to be methodical about how we do it. Lots of great opportunities out there, lots of things to do, but just to be thoughtful about it.
So when you're talking about specific stocks, what specific industries are you looking at that you find more opportunity in, and which ones are you avoiding?
Yeah, the industries that we're looking at, healthcare can be great. There's some great possibilities there. The companies that are using AI, technology, some of the technology software, financials. We just try to think about where we are in the market cycle, this whole reflation concept, a soft landing concept, and what might do well under those circumstances. It's also interesting, consumer discretionary. We're seeing a lot in the services. People are still traveling, still spending money, although there is a bifurcation in the classes of who's spending and who's not. So that is a little concerning, and it's something that we are keeping an eye on as well.
So, I guess a lot of us grew up with the 60-40 portfolio, 60% of our portfolio in stocks, 40% in bonds. I kind of feel like that's a little passé these days. Depending upon your clients, like for your average client, how do you kind of think about stocks, bonds, maybe even alternatives?
Yeah, we definitely have asset allocation models that we follow based on, the client's net worth and risk tolerance. But then we have to really think about the client individually and always think about it this way. Easiest and simplest step is this long-term money or short-term money? If it's long-term money and you have time to go through the ups and downs of the market cycles, then a brunt of that or a large portion of that can be put into the equity markets. If it's short-term money, you're buying a house next year, or you have some sort of a purchase coming up, don't put that into the equity markets. Put that into short-term preferred savings, CDs, treasuries, things that are more liquid and you have access to. So the first thing is you have to think about someone's time frame. And then in terms of the allocation, our clients we're looking at equities, we're still looking at fixed income. In their taxable accounts, we are absolutely doing municipal bonds because that tax-free equivalent yield is going to be very important for these clients, particularly if tax rates go up at some point in the future. And then, of course, alternatives have become much more predominant in the markets and much more mainstream. And that's basically because that area of the market is catering to individual investors, not only institutional, and endowment investors. And that is making it more palatable to invest in the alternative markets.
That's interesting because there's a 60-40 model in the terminal, Paul, for the type of portfolio. So it's BMA 60-40. You can find it in there, but it's actually outperformed on a quarterly basis in 7 of the past 8 quarters and actually rose 5.5% in the third quarter.
Yeah, well, if you think about it, of course, the bonds are going to outperform in the last 8 quarters because we had the fixed income market, the bond market got crushed 2 years ago. So it's only come up since then. So you have to put it into perspective when you're thinking about allocations and what you're doing. And I always like to say, and it's kind of cliche at this point, but skate to where the puck is going, not where it is. We don't want to think about what happened in the past. We want to think about where are we going and position clients properly with in mind that we want to protect on the downside too. And for the most part, if you're investing in the market, you may have already won the game, so we want to protect you on the downside.
All right, Kathy, thank you so much for joining us. As always, appreciate getting some of your time. Kathy Antwistle, Managing Director over there at Morgan Stanley Private Wealth Management. One of the names really in the news today for not the good reasons is Super Micro Computer. Its auditor resigned. That's not good. The stock's off 30% on that news. Let's break down what's going over there because this was a high-flying AI-type stock that peaked at about $180 a share back in March.
Yeah, it added to the S&P 500 back in March.
Right, so right at the all-time high, but boy, down at $34 a share right now. Woo Jin Ho joins us. He's a senior technology analyst for Bloomberg Intelligence. He's down in our Princeton, New Jersey office. Woo, what happened today over at Super Micro Computer?
Yeah, so thanks, Paul. Look, there's been some filing delays at Supermicro, some differences of opinion in terms of the auditor and the management team, and essentially the auditor resigned due to quote-unquote integrity issues with the management team there.
And this isn't like Joe's CPAs. This is Ernst & Young.
This is a big deal.
Resigning, and this does not happen often at all. So what's Ernst & Young saying about why they resigned?
Well, in the 8K filing, essentially Ernst & Young is saying that there were some differences of opinion, and they didn't think that there was enough transparency from the auditor committee, as well as integrity issues from the auditor committee. So look, quite frankly, it's the first time I've ever seen language like that. And the other thing that I can state is that, Ernst & Young is the second auditor that Supermicro had in a span of 18 months. So they were supposed to clean up the issues from the prior auditor, and it sounds like they found issues that just couldn't be resolved.
And of course, the resignation comes after news broke last month that the DOJ had launched a probe into an ex-employee's claims that Supermicro actually violated accounting rules. What do we know so far about how many different issues there are kind of more broadly when it comes to this company?
Yeah, not much news has come out of the DOJ probe, but it is bringing up some older issues that caused their delisting roughly 3 to 4 years back. Essentially, they were very aggressive on their accounting side, and it seems as if, based on a short report that came out in July, it seems as if they went back to their old ways in the recent months and recent quarters.
Woods, just as an outside observer here, I see a story like this and I say, I need change at the board level and I need change in the C-suite level. Are you hearing calls from some of their shareholders for some types of moves like that?
Well, that's how we titled our React report. It's like, look, Supermicro needs more than an auditor change to fix this. And we were concerned about their corporate governance. If you keep in mind that there aren't many independent board members, one of whom includes the wife of the CEO, there really needs to be a lot more independence on the board. And quite frankly, given the now growing concerns of financial malfeasance, I think the CFO has to go, and if they can't clean this up, there might be a need for a change at the top.
Paul mentioned the stocks pain that we've been seeing in it so far today, down over 30% on pace for its worst day since October of 2018. From a technical perspective, how much more pain do you think there is to run here?
Well, the question is are the revenues real? I do think that the revenues are real. I don't know how real the profitability may be, right? Because there are multiple ways to probably manipulate the numbers. The one thing that we wrote is that the near-term deals are probably intact because it's really tough to switch vendors for an AI deal. But longer term, there are going to be downs in terms of order activity and working with Supermicro. So it's going to be the future outlook going forward that could be at risk and could drive the stock going forward.
All right, Wooj, thanks so much for joining us. Woo Jin Ho, he's a senior technology analyst for Bloomberg Intelligence. He's based down there in our Princeton office. Again, the stock off 30% today. SMCI is the ticker. Despite that, it's still up about 20% on the year.
Yeah.
It's got a market cap right now just about $20 billion. But again, this thing back in March of this year was $180.
Right. It had been the best performing stock in the S&P 500 at one point for the year, even outpacing NVIDIA's earnings. But then once you see these big declines, obviously not anymore.
And Woo Jin saying that this is the second auditor they've had in 18 months, I think tells you all you need to know here. It's just, it kind of goes to a credibility of their reported financial results. And if, as an investor, if you don't feel comfortable with the financial results, it's tough to put a valuation on that. I think that's kind of what we're seeing today. We're seeing that move, again, a 70% move off of that March high. So again, the market kind of voting with its feet. S&P 500 up 10, Dow up 160, NASDAQ up 30. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. A rally and several big tech stocks driving stocks higher right now. The S&P 500, 15 points higher. That's up 0.25%. 58.47 on the index. The Dow Jones Industrial Average up 209 points. That's a rise of 0.5%. And right now, the NASDAQ Composite Index adding to its record. It is up 0.2%, 42 points higher. The Bloomberg Magnificent 7 gauge rising about 1%, with Google parent Alphabet up 6% right now, 5.9% after delivering better than expected sales. And those gains actually overshadowing a rout in the chip makers, driven by a slide in NVIDIA Corporation. NVIDIA shares right now down about 0.9%. You had underwhelming results at Advanced Micro Devices, and the server supplier Super Microcomputer, those shares right now tumbling just about 31% as Ernst & Young resigned as its auditor. Also, Visa, the world's biggest payments network, climbing on solid results. And then you have Eli Lilly sliding after lowering guidance amid lackluster sales of its weight loss drug. Because of the latest economic data, GDP included bond traders slightly trimming bets on policy easing. Remember, Fed meeting next week. Friday, of course, the big payrolls report. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Jess and Paul.
All right, John Tucker, thank you so much. We appreciate that. Jess Metten sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So you can head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. As John was just reporting some good numbers last night out of Google. This is an alphabet-free studio. Google stock up 7-8%, market like that. Another big earnings coming out after the close today. Just Meta and Microsoft will get some more on that tech TMT space. I want to bring in our guest, Scott Kessler. He's global sector lead covering the TMT space for Third Bridge. Scott's been around this business, covering this sector for a long time. He knows of what he speaks. Hey, Scott, what'd you make? Let's start last night with Google. What kind of jumped out at you? Because the stock's trading a lot higher today, so investors liked what they saw.
Yeah, thanks a lot, Paul. I mean, I think a couple of things, right? I think kind of the sustained, consistent growth in the core business, but notably the acceleration in growth in Google Cloud going from, I think, 29% to 35% sequentially. That really got my attention, but also the indicated increases in CapEx, I think probably gives some pause, because you're talking about substantial growth, even though we've already spent a lot of money there over the last couple of years.
And of course, the 5 biggest companies in the S&P 500 when it comes to Apple, NVIDIA, Microsoft, Alphabet, and Amazon, as you know, are projected to post average earnings growth around 20% in the third quarter results. So that's some BI data, Bloomberg Intelligence, of course. So obviously, you're seeing even companies beyond the S&P 500 see earnings grow here. But of course, people still want to harp on a lot of it when you're thinking about the slowest collective expansion in 6 quarters. But of course, there are a lot of those base effects because there was such a lower bar in 2022 because we were in a bear market and their earnings outlook wasn't as strong. And as the quarters continue to move on, obviously the base over base effects kind of aren't as strong as what we would have had as far as NVIDIA with that blockbuster revenue forecast last year. So how much of it is sort of the AI story as far as concern about growth slowing versus it's just base effects? Because it looks like when it comes to growth in tech, it's still powering overall earnings right now.
Yeah, I think painting all of tech or TMT with this kind of AI brush can be a little challenging and frankly require some nuance. So if we think about the big companies that have reported and are reporting soon, I think there are kind of 2 stories to think about. One is AI from the perspective of revenue growth. And I think it's pretty clear, and Paul, I'll use your parlance, Google essentially said that the big acceleration in Google Cloud growth from Q2 to Q3 came, I'd say, in parts largely from a lot of the improvements they've made on the AI side of things. So they're basically acknowledging and confirming that AI is, in fact, spurring and driving revenue growth. The flip side of that equation, though, is when you look at whether it's an Alphabet or you look at Meta or Microsoft, you're talking about CapEx expected to increase during the current years, whether they be calendar or fiscal, anywhere from 30 to 60%. So notwithstanding how well the companies are growing revenues, and Jess, I think you alluded to this, the CapEx increases are higher, which means that the companies need to do more in the way of expense management or projecting growth into the future to kind of substantiate those increases.
All right, after the close tonight, we'll get Meta and Microsoft. Let's start with Meta. The stock's up 70% year to date, one of the best performers out there. What will you be looking for from our good friends at Facebook/Meta?
Yeah, I mean, I think the number one thing is, to what extent are they going to maintain the growth story? I think indications from the likes of Google and Snap are that, look, the digital ad market remains healthy. I think it's fair to say, based on conversations we've had with experts, that frankly, Meta and its properties are poised to continue to gain share. There are a variety of reasons for that, but I would argue AI is a big reason for why Meta will continue to perform well. And it's just because Advantage Plus, which is their kind of ad platform that's powered by AI, continues to drive higher ROAS, return on advertising spend. And that's what customers want to hear. So they'll spend more if they're getting higher returns. So that higher level of revenue growth, higher level of ROAS powered by AI, that's one part of the story. But the other part is what I alluded to earlier, which is how much are they spending on AI to make all of this possible? That's a big question, and I think something that people should at least be bracing for a little bit.
It's interesting because after looking at the start to the year for the Magnificent Seven, it actually had rallied 22% up until that high on July 10th. But now, since then, it's down about 0.2%. But of course, the NASDAQ 100 is only a stone's throw away from another record high. So what I'm wondering is, while many of the companies carry higher valuation than historical averages, do you think that there's more room for those types of cohort to bounce back and rebound after they underperformed broadly in the third quarter?
Yeah, I mean, look, I think the third quarter, there are a lot of different things going on. I think right now, frankly, people are probably focusing on earnings and outlooks, number one, and then the election next week, number two. And so once we get all those inputs, and hopefully we'll have some clarity as to the way forward in 2025, I think people will look to refocus on these names. I've heard a lot of people talk about them as a unique combination of growth and value right now in the market, because as I think we've been talking about, expectations are for continuing growth kind of in the teens on a revenue basis, with the possibility of sustained or improving margins. Obviously, the big wild card is, in fact, that AI-driven CapEx. But I think a lot of people do look at these names at this point, perhaps after some of the volatility in Q3, as value opportunities.
Microsoft, 30 seconds left, Scott. What should we be looking for?
Yeah, I mean, I think the big question with Microsoft, and it has been the case for the last number of quarters, is Azure, right? Amazingly, I would argue, given the relative size of Azure versus Google Cloud, is that Azure has consistently been growing at or above the level of Google Cloud. So we'll see. People now are looking for 31% growth. You saw Google Cloud increasing at 35%. We'll see if people are going to be happily surprised by what Azure growth is and is expected to be for the next quarter.
Scott, thanks so much for joining us. Always appreciate getting the benefits of your experience, your expertise. Scott Kessler, longtime TMT analyst on Wall Street. He's now at Third Bridge. Give us a little preview of Meta, Microsoft after the close here, see if they can follow on the heels of Google, which had such a good results last night.
You know, it's interesting. I put together a taking stock column for this morning where I was looking at kind of the historical in the recent quarters, how the options implied volatility whenever you do have those big names. But usually it's the options implied move for the S&P 500 is about 1%, which sounds kind of large, but kind of pales in comparison to the implied moves for next week, just given we have so many events with the election, obviously Fed decision next week.
Exactly. All right, coming up, folks, Gerard DePippo, senior geoeconomics analyst for Bloomberg Economics, on the big take story here, which is the U.S. is struggling to stop China's tech supremacy push. We'll break that down going forward. This is Bloomberg. Good morning.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Jess Bennett and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Bloomberg Intelligence, we are huge fans of the big take stories available on Bloomberg Terminal and on Bloomberg.com. These are deep dives of really, really important stories. These reporters have got lots of resources to do some really deep research, and they come up with fantastic stories, great reporting, great graphics for me.
Always a great read.
Yes, always a great read. The graphics just jump out at you and really help you explain what's going on. Today's is just one of the best I've seen. Gerard DePippo joins us, senior geoeconomics analyst for Bloomberg Economics, joins us. Here's the title: U.S. efforts to contain Xi's push for tech supremacy are faltering. The world outside the U.S. is increasingly driving Chinese electric vehicles, scrolling the web on Chinese smartphones, and powering their homes with Chinese solar panels. Gerard, we've been talking a lot about tariffs. There seems to be a tech Cold War between China and the West, but China seems to be doing okay. Can you give us some meat to that story?
Sure. So what we at Bloomberg Economics with our colleagues at Bloomberg Intelligence and the news looked at was 13 key technologies that are part of China's Made in China 2025 initiative, which was from about 10 years ago, that was seeking dominance in 10 strategic sectors. We basically selected 13 technologies that we think are key and as part of that plan. And of those 13 technologies, China is a world leader already in 5 of them, and it is catching up fast in 7 others. The only one where it's lagging is in commercial aircraft.
So what are those 5 specific key technologies?
Sure. So that would be drones, basically, high-speed rail, EVs and lithium batteries, solar panels, and then some advanced materials like graphene.
So in an effort to a certain degree try to isolate China, it seems like perversely the incentive is for them to develop all this stuff on their own and rely less on the West. Is that also what's happening in certain industries?
The Made in China 25, when it came out in 2015, it's in a way a vestige of a less geopolitically tense time. So it's before the trade war, for example. And even back then, China was trying to indigenize its firms and these technologies. So their desire to do so predates the trade war and predates the export controls. However, since about 2019, when China went silent on the phrase Made in China 25 because it was triggering too many antibodies in the West, even though it's still going on, China has actually accelerated its indigenous innovation and self-reliance efforts. Even at the 3rd plenum, which is the big meeting the Communist Party had in July, self-reliance was the key theme. So in a sense, the U.S. and China are playing off of each other, and the actions of one are vindicating the actions of another, and so it's sort of fueling the competition.
So for Washington, what do you think is the greatest risk here?
Ultimately, it's about competitiveness and national security. So, I mean, at a high level, what the U.S. is afraid of is falling behind in general in things that matter economically, but specifically in things that have military applications, like perhaps artificial intelligence. I think from a policy perspective, the risks are that the measures like tariffs or export controls could be counterproductive. They could actually spur China to move faster, particularly if there's leakage. So, for example, Bloomberg News recently reported that Huawei might be getting advanced chips from TSMC in Taiwan through a cutout entity, right? So that's a loophole essentially in the export controls. So having weak export controls or those with loopholes might be worse than having none at all. And so in essence, the U.S. and China have already started the race. It's not going to stop, I think, irrespective of who wins the U.S. election. But both sides are playing, they're in it to win it. And ultimately, it's about dominating the technologies of the future.
Electric vehicles, that's an area where you hear a lot about tariffs, but you also hear about the advances that Chinese automakers are making, not just in China, but around the world. How do they view the EV business, maybe even the autonomous vehicle business?
China's doing well in both of the things, right? So that is an area where they had very robust and I think thoughtful industrial policies that go back almost 15 years. The fact that China, like say BYD, cannot access the U.S. market, it's not good for them, but it's clearly not a killer. I've looked at their numbers that came out today. BYD is doing quite well. And so China, that's an example where because what we're dealing with autos are final goods that China can actually fully leverage its huge domestic market for, it then doesn't actually pick winners. They have industrial policies, but it wasn't about saying BYD versus NIO or whatever gets all the subsidies. They were both eligible, and ultimately the consumers decided, and they created globally competitive companies.
So how likely would this end up isolating the U.S. and/or hurting businesses and consumers?
I think the export controls are the most acute issue. I think there's a rather robust debate in D.C. as to whether it's hurting U.S. tech firms, whether they need those revenues for innovation, and for things like electric vehicles. Americans can't really buy Chinese EVs. I mean, they could theoretically, but they'd be incredibly expensive. And so it results in less consumer choice. It probably means slower innovation in the U.S. ecosystem because they don't have to compete. On the other hand, one would argue that if you just open the floodgates to, say, Chinese EVs that have already benefited from industrial policy, the U.S. is too far behind and U.S. firms might lose out. And so, I mean, there might be a sweet spot, which is you allow Chinese investment in the U.S., but that's not really what the U.S. government seems inclined to do.
Gerard, great stuff. You and the team there, pat on the back there, great work. Gerard DePippo, Senior Geoeconomics Analyst for Bloomberg Economics with the big take story.
The way I think about culture is they call organizations superorganisms. It's a collection of people, but the collection is greater than the individuals combined. So 1 + 1 is not 2, ideally it's 3 and greater. So if you were to look at a single person, a person has a set of core values, they may have dreams and aspirations. If you kind of map that to an organization, you can also think of the culture as your core values, personal core values turn into corporate core values, your organization's strengths and weaknesses. All those things collectively combined is something that we kind of put a label on it called the culture. A culture is like a muscle memory. It's very hard to change a habit. It's very hard to just say, hey, today we're going to define our culture as XYZ. We're just going to change this way. Like, it doesn't work like that. It's a collection of people's habits. That's like, again, like a superorganism. So you have to like really nudge and create an iterative feedback loop. It's a slowly evolving thing. So that's why it's so critical. Like your day-to-day decision-making, day-to-day operation, everyday execution is really dictated by the culture of your organization, not by a couple of like checklists. It's not what you write on the wall. It's what you do and live and breathe every day. And that is the culture.
Job. In one state, an effort to thin the voter rolls has gotten the green light from the U.S. Supreme Court.
The High Court's conservative majority, without giving a rationale, granted an emergency appeal from Virginia's Republican administration, which said the purge was meant to stop people who aren't U.S. citizens from voting. Federal court records indicated that some of the 1,600 voters who were removed are U.S. citizens. A lawyer for the private groups says people can still register to vote on Election Day and cast ballots, and calls the Supreme Court's decision outrageous. Allison Keyes, CBS News, Washington.
The government says the economy grew at a 2.8% annual rate over the summer. It's a bit slower than what was reported in the second quarter. CBS's Jill Schlesinger.
The government also said that consumer prices rose at a 1.5% annual rate in the third quarter and were up 2.3% from a year ago. This should hearten the Federal Reserve, which conducts its next policy meeting just days after the election. The Fed is expected to cut interest rates again by 0.25 percentage point.
The death toll now tops 70 in parts of Spain hit by heavy rain and floods.
Red alert in the Valencia region, where a month's worth of rain fell in 1 hour. Rescuers call out to victims wading through flooded streets. Roads and towns were submerged in minutes. Phone footage appears to show some people trapped by the floodwaters and climbing into trees to avoid being swept away. And Valencia's governor says many people remain trapped in inaccessible areas. Vicki Barker, CBS News, London.
The largest newspaper in New Jersey, the Star-Ledger, says it will stop publishing a daily print edition next year due to rising costs. An online version will continue. Checking Wall Street, right now the Dow is up 212 points. The S&P is up 16, and the NASDAQ is up 42 points. This is CBS News.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
It's all gut from here. Welcome to the fastest show in politics with more outrage over rhetoric, 2 important rulings by the Supreme Court today, and big questions about the impact of early voting. We're less than a week out, and we've got a lot to cover. Glad you're with us here on Balance of Power. We're joined this hour by Democratic strategist Brad Howard of Corcoran Street Group. Bloomberg's David Gura will join from the swing state of Wisconsin. Bloomberg Politics editor Wendy Benjamin here in Washington, and analysis from our political panel. Bloomberg Politics contributor, Republican strategist Rick Davis, alongside Laura Fink, Democratic strategist at Rebel Communications. Let's wind up the band once again. We start, as always, with the baseline on Wall Street and an update on the markets with the help of Amy Morris. Hi, Amy.
Hi, Joe.